we request that we start this meeting because member wanakuja, wakikuta hatujaanza wanatoka. We believe that when we start formally, they will come and settle so that we can proceed with the program of the day. I wish to request our sister, Joyce Mogoi, to lead us in a word of prayer so that we can start. Thank you very much, Dr. for that prayer. Members, I'm sure everybody knows me, but in the event that there may be somebody who doesn't know me, my name is Sendeyo, JDL. I'm a worker here. I'm a staff of Chuka University in the Office of the Registrar, Administration and Planning as a Deputy Registrar. I'm also heading a directorate called Directorate of Facilities and Utility Services. That is my substantive position. But in the scheme, I'm a trustee, a sponsor-nominated trustee. We represent members' interests in the scheme. I'm glad we also have another trustee from Chuka University who is member-elected, Professor Paul Kuria Kamweru, and he is also representing you very well. I wish that we can start with a few introductions so that we know who are here. Then after that, we can officially start the meeting. May I request the trustees that are present here to kindly stand. The trustees that are present here. The Board of Trustees may not be here, the whole of it, because we are conscious of the cost implications and other logistics. So we split. We split amongst ourselves. So I had said my name is Sendeyo. I'm a trustee. I also, in the scheme, I'm also the chair of the Audit and Risk Management Committee. Next is Professor Kamweru. I'm just avoiding him using the mic for now. He's Professor Kamweru. He's a professor of physics here, and of course we know that he's the dean of the Faculty of Science and Technology. He is also a member-elected trustee. He traversed the entire coverage. He went to Kisii, Laikipia, Chuka, Tharaka to look for votes, and he was elected. Next to him is our brother, anaitwa Stephen Mokaya Maangi. He is from Kisii University. He is also a trustee, sponsor nominated. He is also the chair of the Administration and Communication Committee of the board. Anaitwa Mokaya. Next to him is John Mwangi Kimamo. He is from Egerton University. He is actually our trust secretary. Hata Kimamo alikuja hapa kuomba kura. So I'm sure those who are in the Kusu constituency may have interacted with him. Maybe the Uasu may not have seen him, but he's one of us in the scheme. Next to him, you also know him. He's a local. He's called John Kenyu Ambaka. He comes from here, but he works in Laikipia University. He is also a member-elected trustee representing Kusu. So those of you who are Kusu members, you may also have interacted with him because he was here na mkampatia kura. Na ndio maana nasimama hapo siku ya leo. Asanteni trustees, thank you very much. With us, we have our secretariat. The secretariat is the people that work in the office. The trustees, as we have said, they come from different universities. So we have other mandates that we are doing for the universities. But we have people who are dedicated for this service. They sit at Egerton University. And we have one of them here, Samuel Milgo Kiplagat. That is our trustee. So for this particular meeting, he's here with us. Next time we might find a different person, because we also rotate them. Thank you very much. Now from there, we have our service provider. One of our service providers, as we know, the scheme has many service providers. The first one is an administrator. The administrator is the one who keeps our records, because we don't have in as much as we have a secretariat, the secretariat sometimes is also a lot of turnover within that, because it's actually a benevolence by Egerton University. They are the ones who give us the secretariat. So we may not have the people who are really dedicated in terms of the actual doing of the work, like doing accounts and those other data things. So we have our administrator, Zamara Actuaries and Asset Consulting. I will give them a chance to introduce themselves now. Then after that, I will give the chance to our DVC, who will, on behalf of management, give us some opening remarks and also officially open the session for us. Maybe you can give the mic to Khalid so that he can introduce his people. Just introduction for now. Khalid.
Good morning, everyone. My name is Khalid Oblinji from Zamara. Happy to be here. I think this is like almost the 6th time I'm visiting. With me, I have 2 of my colleagues we work directly with. On my far right is Shalin Kabuta. She'll be talking to you. She's a consultant at Zamara. I also have Albert Anam on my left. He's also a consultant from Zamara. And we have a psychologist. Olela, that name is very difficult. It keeps disappearing from me. Yeah, we have Olela. Olela is a psychologist by profession, and he will also looking at psychological matters. That's the team we have here. Thank you.
Thank you very much. Of course, we have other service providers, but for this particular sitting, they are not here. We usually have fund managers who manage our funds. They are the ones who do the investments for us. We also have property managers who manage the properties that we have. In the event that we require legal services, we also have a legal advisor. Of course, at the end of every year, we have to do our financial statements, so we have auditors. All those people are not here today. But because the administrator actually does most of our records and everything, that is the firm we involve most in such trainings as this. So I want to also introduce our members. Nataka kuona vile tumekuja so that we can see. And as we do this, we can also send word to our colleagues so that they can come, tell them we have started the training by standing up, not by a show of hands, by standing up. Let me see the number of the members that are coming from Kusu. Kusu. Tupigie Kusu makofi. But even as we clap for them, we also want to send them tuambie wengine wakuje bado. We continue texting. Tuambie kujeni. Let's see the members that subscribe to UASU. UASU members wamekuja in their numbers, led by Professor Musundia. Karibuni sana. Let's continue texting. Tuambie wakuje, tumeanza, and the party has started. So without further ado, I want to, in a very humble way, to welcome our DVC, Professor Jonah Kindiki, who is going to give us some words of wisdom and also officially open the meeting for us. Karibu, Prof. Okay, thank you, Mr. Sendeo. Our colleagues from Samara, our members from Uasu and Kusu, the managers of these retirement benefits, representing various universities, including Chuka University. Ladies and gentlemen, good morning. My name is Professor John Akindiki, as you have been told. I'm the Deputy Vice Chancellor, Administration, Finance, Planning and Development. The Vice Chancellor is not here, but he is around, he's in the university. But there's a student leaders meeting where he's attending with the Professor Nduru, the Deputy Vice Chancellor, ASA. So we have tried to share responsibilities. That's why I have come, and you are expecting the Vice Chancellor to come and open this session. Having said that, I would like to say that it's indeed a privilege to be among you this morning. I expected a bigger crowd than what we have, but I think, as Mr. Sedeo has mentioned, start texting other members so that they can join us in the due course of these sessions. Sometimes the retirement benefits schemes, people take it for granted. When they are just working, they are very comfortable. But the day you receive a letter of retirement is when people start getting surprised, and it looks like it's a big surprise because we are not ready for retirement. And then we start writing letters for extension. And actually, for me, before you retire, you should even give the employer notice that before he gives you the notice, or they give you the notice, you give them the notice and tell them, on such and such a date, I'm preparing to retire. Even those members who like retiring early. So whichever way you take, retirement is inevitable. You can't avoid it. Reason being, you cannot limit the process of aging. It's natural, and you can't stop it. And therefore, if retirement is at 60 for KUSU members, there's no need of coming around and asking for extension. However, if you are not prepared, you can ask for it. But I'm saying there is no need, because the cap is 60. If you are a lecturer, the age of 70, people think it's a long, long period of time. But 70 is just a number. If you are not prepared, 70 years will just clock just like that. And start writing another letter requesting for extension, and sometimes you are not very strong, and you keep disturbing people around. One thing I've learned in my experience in teaching, because I've been in this career for a very long time, many people, I don't have the statistics, but I can guess 75% of workers, the experts will tell you, are not ready, they are always not ready for retirement. Almost 75%. Even those who are ready, they pretend to be ready. When I learned this secret, I started doing the following. If you would like also to emulate me as an example, you can. And when I was asked this morning to come and share with you, I decided to discuss briefly about 5 points. And then I declare this session officially opened. Number one,
as an employee, please start financial planning early. Start financial planning early. This is my experience. I'm always sharing with you my experience. And when I came to Chuka University, I told people in my office that even if I'm told to retire tomorrow, I report today, and then the following day you are told, Professor Kindiki, go home. I will go home very happy, man. Because I'm set. I'm set to work, and I'm set to retire anytime. So even I stand before you here, if Chuka University, who is my employer, decides to terminate my services, I will not complain. I will not write the extension even one day, even 1 hour. In fact, the earlier the better for me. However, because I have that opportunity, I have to work because the opportunity is there of working. Why should I retire? Because retirement goes with other challenges. Like my mind will be idle. I will have I don't have a lot of engagement with my colleagues and so forth. I'll miss that. But still, even if I retire, I'll look for another audience. Not only professors, I'll look for other audience because I have a part B. So, starting financial planning early is very, very important. Beginning saving and investing as early as possible to build sufficient retirement income beyond your pension benefits. Please, it is important. Second experience I have is on understand your pension benefits. Like this session, I'm sure the experts and the speakers who come here, they are going to speak about how you need to understand your pension benefits. So regularly, it's important to attend sessions like this and other review meetings so that you can review your pension statements and understand how the benefits are calculated to avoid surprises as retirement. I have a colleague of mine who retired about 2 years ago, and he told me that he thought he would get a lot of money after retirement, but what he has been told he will get is 1-point-something million. Then I asked him, what went wrong? He said that I thought the university was remitting money, pension, deductions. But the university didn't. They deduct from your payslip, they don't remit, and therefore when this person retired, what he got was only 1.56 million. But I asked him, what is the total pension? He said, total pension is about 8 million. But what I can offer is only 1.5. And he was very surprised. Don't be surprised like that person. It's good to calculate and be ready. So if it is 1 million, if it is 800,000, if it is 2 million, whatever money, you need to start calculating and know what has been remitted and what has not been remitted. So that when you retire, you are not taken to a surprise. Number 3, these are my experience. The experience number 3 I have is about clearing debts before retirement. There are many workers, whether you are in KUSU or UASU, as long as you are a worker, you retire and you have loans. That is the greatest mistake you can do. So you can only apply for loans during the time you know that you'll be able to pay, and when you retire, you have no loans. And I have so many friends of mine, and I'm talking out of experience, that you find as a worker has been working for many years, but when they retire, they apply for loans using the retirement benefits. I have a friend who gets about 70,000 because he was a senior education officer. I'm in education, by the way. And the government pays about 70,000, but he has grandchildren at home. He told me that he had to pay fees and other things he has to do, and he didn't have a proper house at home. And therefore, he applied for loan, and he told me he is paying, I think, about 60,000 per month, and he earns 70 per month. So I asked him, won't you take home? He told me 10,000. And then I go, there's a shop where he takes some things from a certain kiosk. Then he has a debt there of about 20,000, because he says his shopping is around 15 to 20,000. Therefore, every month, even after receiving the monthly payment, he has a deficit of about 10,000. So it's accumulatively. Sometimes he is able to pay, other times he is not able to pay. Therefore, he keeps a debt of about 10,000 every month. And then he told me, even our medical insurance have a problem because he can't pay. I'm talking about my experience, because me, I like learning from other people so that they can be an example, and also I can be an example to other people. So it's going to clear debts before retirement, and if possible, him to reduce and clear especially major debts to minimize financial pressure after leaving employment. Number 4, invest in health and insurance. You know, as you age, your body becomes weak and not resistant to diseases, and you are prone to sickness and other kind of ailments. Therefore, it is important to have a proper investment in your health and insurance, so that when you age and you are unable to work and function as you used when you are young, then you are able to take care of your health, maintain a healthy life, and obtain adequate medical insurance to manage health care costs during retirement. It's really a subject of concern, and many employees, they take for granted their health, and we think it will be strong throughout our lives. But that should be taken with a lot of keen interest, so that when you invest in your health and insurance, you'll be able to manage your health care costs. By the way, when you are young, you spend less in your health care costs, and as you age to 60 plus, 70 plus, most of the time and a lot of money will be spent to take care of your health. We thank God you are healthy now and you are strong. But even if you are healthy now and you are and at the same time strong, it will come a time when you become weak, and much of the money that you get is spent on health care activities. Finally, number 5, is good to develop an additional income plan. Think about an additional income plan. This is very important. Very important. Very important. There are people, the employees who work from day 1 to the last day, they have no chicken at home. So when they retire, you start gathering chicken, and they are eaten by eagles and the mongoose and other animals around. Others die because of, you don't know how to keep them because you have been an officer in the office, and you don't know how to catch chicken. They fly away, you can't eat because you have been eating in restaurants and eating chips and good food. But when you go the other side, you find there are people who have never been employed in formal employment. They are experts in keeping chicken. And they come to teach you, but you can't get it because you never started. So it's not difficult to keep a chicken, to keep a cow, or something, or whatever you want, just something extra, without taking much time of your employer. And you can have that signed plan, because I have a friend of mine who told me that he will get the retirement benefits and he will start a Mutumba business. I told them, I wish you well. He went and put all the money there. And I have two examples. I'll give you one for Mutumba. Another one I'll tell you after this. So he put all his money in Mutumba business. Got a few millions. He employed the young people. And the young people, they know how to deal with the old men and women. So every time, Anambua Mzee, this work is done like this. He asked, how much have you brought? He said, no, we didn't have customers today. Ye mzee wewe, kama ni mama, we mama ngoja kidogo, we mzee ngoja kidogo. So mzee waited. There was nothing which was being banked. And then he could stand at the stores trying to sell mitumba. The people who were there were very experienced. And he was the only one. Because he's a professor, you can't wear a tie like what I'm wearing, because if I am selling mitumba and I'm dressed like this, nobody will buy. People calling me, how are you, DVC, how are you, sir? They salute me, but I go home angry because I have no money. Then if you call me DVC, sir, and you have a tie and a suit, it doesn't make sense. Because those people are making money. And they make money dressed like those people are going to look for that money. I'm talking about an extra plan. He never got anything. After 1 year, the business collapsed. He didn't have a chicken, didn't know. I said, if you start keeping chicken, they went, he didn't know how to manage them. They all died. So he became so poor, by the way, and that's a real story. Me, I like giving real stories. Until we were able to support him and making contributions, which is not very good. Like now that my title is a professor, surely I go home. Then the one who is contributing for me is a farmer who has a few chicken, is giving me 100 shillings, and other people who are doing manual jobs, mtu wa mjengo, ananiambia pole professor, ananipatia 1,000. Nao ni watu wangu, walikuwa watu wangu wa mkono. Sasa hao wamechange. And they give you, by the way, that title will never run away from you. Even when you are hungry, unaingia kwa restaurant, wanakwambia patia professor chai pale. You still like not taking that tea because you are the only professor. All others in that restaurant are not professors. Ata professor pewe pale, ata yule pewe. Sasa, what is all this going on? And then after 2 years, I die, and then you come and bury me because of pressure and frustrations. Plan and have extra. The final example I'll give, a friend of mine retired, and this is a very practical example. He told me he would start business in, what do you call it, a restaurant, but he will be selling beer. So he went to Mombasa, a full lorry of crates of beer, I don't know what brand. Then somewhere at Mutito or somewhere in between Nairobi and Mombasa, the whole lorry overturned, and all the bottles were spilled over, and the people in the village came, collected all the beer. They ran away in the bushes and hiding and whatever, because the man was not there and he could not be managed. It's only the driver and other people. And that was the end of the business. What am I saying? Start a small business that you can manage when you are working, so that even if you retire, you can continue working with it because you have started before. Never retire, I will say that, but the experts will tell you, and then to start a new business. I'm saying develop an additional income plan while you are working, so that you can gain experience and also have colleagues in that area, so that if after 5 from Chuka University you have a kiosk at Dagani, you'll start developing collegiality with the people that you are working with, and those are the people who support you when you retire. Ladies and gentlemen, I'm not a speaker, but I was coming to give a few tips, and those are 5 tips that have very practical experience of them. And there's no addition, just to stop there, and I wish you a lovely session. You deliberate on these issues, and tell your colleagues they should not take these things lightly, because one day you will have no opportunity of working. And I'm not saying don't work. You have to work, but you have to balance work and a plan for retirement, because they go together, work and retirement. Remember, one day you will stop working. What will you do? With those very many remarks, I would like to declare this session officially opened. Thank you very much, Mr. Sendeo. I don't know whether I've really been able to articulate what members wanted, but that's what I had in my mind. Thank you very much. God bless you.
Prof, thank you very much. Actually, I want him to settle so that I say what I want to say. I said that let Professor come here and give us some nuggets of wisdom. And he has actually summarized the entire day's presentation, from the beginning to the end. And you'll be witnesses, because that is exactly what will be covered the whole day. In fact, we'll go to Nambiana na Prof hapo. We can as well close the training and go home. But now, because we are here and he has given us a summary, it is only good that we get the details. But sincerely, Prof, the 5 points is exactly what we are coming to cover here today. So that is Solomonic. That is Solomonic wisdom. In fact, it's not even a wisdom. It's a revelation. A serious revelation. Kama ni kule kanisani, tungesema in the name of the Father and of the Son and of the Holy Spirit. Tunafungia hapo. Lakini because we called some facilitators here, they will give us the details now of that summary. So we are so grateful, Prof, for those wonderful and very insightful words. Actually, the day is just meant to discuss that. And just like he has said in conclusion, sometimes we take these things for granted. I am sorry to tell you, I have been in this business for now some time. I have met a professor who has now been issued with a notice of retirement. Na ndiye anakuja kwangu kwa ofisi ananiuliza, Sendeo, how much money do you think I have in that scheme? Imagine somebody has been working for so many years, at the point of now departure almost, he doesn't even know what is worth his in that scheme. That is very tragic. Supposing I tell you it's 1 million, just like what Professor has told us, you are expecting a lot of money, you thought maybe a lot of money was getting into the scheme, you come to realize at the end of it all, that in 1.7 million, you've said 1.7, it can be very devastating. And just like he has said, there are people who go very fast because of, after the working life, you know, things change. Anyway, I don't want to delve into the presentations, but we want to appreciate you. Prof, can we give him now a better clap? Jedida is showing me otherwise. Ananiambia tufanya hivi. You can show us, Jedida. You can lead us to give that. Just stand up. Just stand up, and this is interactive. We are all in it. Yeah. Yes. That is rehearsal. Now we can do it. Good. Thank you very much. And I like that kind of innovativeness. So without now any further ado, I want to invite Khalid, who will give us now the outline of what we are going to discuss today. And Professor Bwana Khalid, now that we have the summary, the details should not be very detailed.
Good morning, everyone. Great. As we settle in, there is a small questionnaire going around. Please take one we need to do a quick, thank you very much. No, it's fine, it's okay. We need to do a quick personal reflection and see if what Prof has said is going to get us somewhere in the middle or we are on course. So please pick that questionnaire. And it's just to find out, are we really ready when retirement comes? So there are around 4 sections. The sections I want you to really concentrate on is financial preparedness. So just go through the question on a personal level. Don't consult. This is you looking at yourself and answer that question clearly based on the options that is there, knowing where you are and where you want to be. Then we have the risk protection section. Also look at it. Then lifestyle. Leave that personal section. We will handle it at a given point. And as you do that, we have a packed up program for you. We will try to move fast so that we are not caught up with time. But we'll really do a reality check to ask, are you really ready? Do you understand your scheme well? And do you know how to access the benefits, the taxation element around it? And of course, basically try to project your benefits where you will be. Then we will talk about a little bit about the budget and cash flow discipline. This is very important, just to cover what Prof has mentioned here. Then how do we really budget for retirement? How do we manage cash flow? Because in retirement it's believed you must be liquid, and then thereafter see how disciplined can we be. Then we will look at estate and legacy planning. That is another area that we really need to give a lot of focus. So importance of making sure that you have your documents in place, your will, your beneficiaries, and all that. And we close with the psychological aspect in terms of how do you start planning for emotional shift? How do you identify yourself so that you don't go to a kiosk and when you're called professor, you take off? You know, those kind of things we need to really handle. And as you answer that, I want to engage you just in the interest of time. And we will engage electronically and physically. So I have a poll here. I hope it will come up. Oh, we will be using Slido a lot in this engagement, and I'll just bring one on the screen. This will be a live engagement. Good. So I know you all have some smartphones. Please just scan the QR code and you will be able to access that question. If you can respond to it quickly, we see what we are expecting for today. If you can't scan the QR code, it's too far. Just go to slido.com. The code is here, as you can see. And let us engage to try and establish really what is our expectation. And I'm hoping that, yeah, I see a few people really getting there. So we need to pick our expectations. And the reason why this is easy is so that we don't have to pass across the mic, but you can still have your voice heard and what you are expecting for today's. If it's not in the program, we will be able to also cover it as well. If you're having challenges, I think the team is here. They can help quickly. Please, let's see feedback coming through. Sorry. It should be on the screen. Good. I'm seeing people now responding. Yes, we need to learn on matters retirement. Please keep them coming. I need at least 10, 15 responses that will give us a guidance on really what is being expected. A short, small answer will really help as we engage here. And feel free to say whatever you want to say. Your answer is anonymous. It will not show who is responding. Like, learning on matters retirement planning, it's very, very important. Very important. That is coming. Practical experience, if possible, with actual solutions. Thank you very much. Thank you very much. We'll look at practical experiences to have a clear understanding of why I should have the deduction for my pension, yet I'm not sure I'll benefit from them once I retire. Very good. Why should I be deducted when I'm not very sure I will get this money once I retire? Yeah, that's another feedback. 2 more people responding. Let's keep them coming. Keep them coming. I don't want to leave anyone out. Learn more about retirement. Yes. Understand on retirement income planning and estimate pension income or retirement in total income I may require to survive. Yes, that's very, very important. Really, really important. What you'll need. And I don't want you to survive. I want you to live. How to better my NRR. Yes, that's the net replacement ratio. How to make it better. Yes, that's just income in retirement. Be able to plan for my retirement. Very good, very good. I'll allow the 3 more coming and then we move forward. And as we do that, I hope you are able to multitask because we will look at this form at some point. Learn how much I will get upon retirement and also how much I'll be getting monthly. Yes, that is the lump sum and the pension. Be able to plan very well. What happens in the event I retire before my retirement age? That is very nice. That's very nice. You retire before your retirement age. Actually, you determine your retirement age. So it's very important. You just say, I want to retire. So even if you want to retire tomorrow, then we can work around it. Learn how to plan. Thank you. Thank you, thank you. I'm closing that. So anybody being left out, know my projected retirement, how is my pension benefit calculated, and estimate the monthly income. Very, very good. I hope the team, you are taking note of that because we will need to cover that. I really want to move to just one more. I'm closing that. I need to bring up one more, just one more in the interest of time. To be able to pick, I don't know how many of us, yeah, that's the question. That's the question. Really, what really worries you most when you think about retirement? Poverty, thank you very much. That's really, really fast. Poverty, yes, I don't want to be poor in retirement. Thank you very much. Let's see. Being able to live a comfortable life, yes, it's very important. How do you maintain your current status? Relatives, where? Okay, relatives, diseases, have saved enough, health secured, and manageable debts. Thank you very much. These are real things. Yeah? Good. I will really be keen to learn about that relatives thing. Yeah? It can be something else. How immediate will I start getting my benefits? Very important. Really, that should be a worry. How fast will I get? Because, you know, you're transitioning from a pay slip to the unknown. Yeah, how do you manage retirement period easily? Being dependent on my children and others. That is the worst thing in retirement, especially now with the Gen Zs and Gen Alphas. Being unable to travel for leisure, I will want to join that person. I want to join that person. It's very, very... kufariki kama sija enjoy benefits. Whoa. I am not with you. We are not dying early. We are not dying early. Yeah, but comfort in retirement. The dream house, this one we should build now. Yeah? The dream house. So how do we really build? What worries you? Wife and children. I hope that is in good way. That is in good way. Yeah. And you see, these are real things that are happening. And it's important that we really talk about them. So this one I'm also closing. I think we've picked that. So my team, I hope we need to advise how do we make sure that we don't die before we enjoy our benefits. How do we handle family and all those kind of things? And how do we build our homes in good time? Very, very important. Very, very important. But now, just to pick up your thoughts, and if you look at your screen, a few lines for you to think about. That this is a journey, and I have a very beautiful bridge here, if you can see the screen. This bridge basically determines what kind of gap that you have between now and your retirement, and how do you make sure that that gap is well covered. And a few sentences just to make you think that, please, that deduction every month is just not by the way of a pain on your income, but that deduction that goes towards your pension is actually your future salary the moment you are not working. And I want you to take it very seriously, that every month you see a deduction on your pay slip, it is actually you're building your future salary when you are no longer in active employment. And that is why I say that every month that pay slip comes, that pay slips write a chapter in your retirement history. So now, how beautiful is that chapter? And I want you to look at it. So if you look at your pay slip and you are seeing a lot of pain, 30%, I don't know, going to KRA, I don't know how much is going to Shisha, the other one is going to where? Housing levy, the house that I don't know if we'll leave it, I'll not go there. The other one, it goes where? Look at, goes towards what? Pension. Because that one is yours directly. And that's why I'm saying that for every month, if you compare what is going to housing levy, SHA, tax, and all that, how much is going towards your journey and your comfortable retirement? So it's very important that we really look at that. And if you think it's comfortable, then when we are doing projection, you will be able to see, are you on course or not? And that's why we are here. Not just to talk about old age. Don't look at pension as old age. I told you you can retire anytime you want. But how do you take ownership of the journey? That is very important. How do you basically be the architecture of the kind of residence that you want to stay in retirement? Take your life and curate it in a way that you know this is how I will be comfortable. And that is what informed our theme for today. We want you to own your future. So I don't want you to just think that I'm a member of a pension scheme. No. I want you to think of how empowered am I when I take that retirement. When that time comes, and Prof has mentioned here, do not wait for the letter to come reminding you that, you know, you have retired. No. Do not wait for that. Take charge and remind the employer that I am still giving you the next how many years? 5 years or 10 years or so. After that, I'm comfortably and to go. Not to go back to the employer and ask, can we have an extension? I was telling Tharaka yesterday that there is one member who reached out to me. I think that member was from Chuka. And that member was telling me, you know, yes, we are professors, we are supposed to retire at 74, but me, I want to go at 60. So can we plan? That should be the discussion that you should be having. So I am hoping that by the time we finish this session today, we will have covered all this and we will have empowered you to be able to be financially secure. And that is very important. Now, back to our form. I hope you filled this form. Kila mtu ako nayo? Mmejaza? Good. Now, I want us to score that form because we will really be looking at this. Unaweza ficha marks yako, it's okay. No problem. So, and I'll use question 1 as an example. I know my projected retirement benefits. So if your answer is the first one, which is the strongest answer on all the questions, then you give yourself 3 points. Give yourself what? How many points? 3 points. So for those who said on question 1, I know my projected retirement benefits clearly and very, very clearly, give yourself 3. If you've said you're not sure, rough estimate, give yourself 2. If you said not sure, give yourself 1. And if you said you have no idea about that, give yourself a 0. Please be as honest as possible. Sindio? Do that for the other questions, all of them. Do that for the other questions, all of them. If you are scoring the highest, then did we get that score? Ama nirudie. Take question 1, for example. I know my projected retirement benefit amount. If your answer was very clearly, you ticked very clearly, that is a 3. If you ticked rough estimate, that is a 2. If you are not sure, that is a 1. If it is no idea, the score is 0. Now, add for each section. If you got, for example, question 1, 3, question 2, you have a 1 or a 2, add that for each section, get the total amount, the total score. And then add the total for all the sections, alafu andika hapa juu. Umepata nini? Overall. Hapo ndio sasa tunataka kuangalia watu wako wapi. Tumefanya? Mathematicians. Good. So the reason for this exercise is to determine where are we in terms of readiness. And then from there, we see how do we move you at least one level higher. Very, very important. So by show of hands, how many have gotten between 0 and 10? Total. It's okay, it's fine. Good, thank you for being honest. Okay? 11 to 15? Thank you very much. Thank you very much for being honest. We will find out what do we need to do. 15 to 20? Thank you very much. 20 to 25? Okay, thank you very much. Yes, behind there. Anybody above 30? Anybody above 30? Good. Albert, kuna kibarua hapa, We need to move people. So let us start with those below 10. If you are honest, you are in a high-risk zone. And we need to start immediate planning to move you to the next level. And that's why we are here for the whole day. Let us look at your individual statement. Just come through. We will look at your individual statement. We will look at what else can we do to move you to the higher level. We will have one-on-one discussions before we leave here. Remember, even if you have to keep us here until 6, we are available for you. For those who are between 10 and 17, you are somehow exposed to these matters. But there are significant gaps that also need what? Urgent attention. Please let us discuss those matters. Let us sit down and see how do you improve and move to to the next level. Those between 18 and 27, yes, you are aware of retirement matters. You have some plans in place. You understand the basics, but we now must put in clear structures. And those structures are what will move you to the highest level, which is between 28 and 36. Now, if you are above 30, you are a strategist. Now, I've not seen any strategist here. So all of us are on this journey to move to the next level. How many are going to work with me to make sure that by the time we leave here, we have some change? By show of hands. Thank you very much. I want to introduce my colleague Shalin to really take you through the scheme. Please focus, ask as many questions as possible, and from there, if you need individualized discussions, we will actually be here to provide that. Karibu Shalin.
Thank you very much. Good morning. Mko salama? Yes, as he has said, my name is Shalin Kavudha, and I work with the Zamara team. And I think for us to start, I will also do a very short poll so that it forms the basis for our conversation in this session. And as Albert is doing that, maybe I would want to know how many of us have been in the scheme for the last 1 year? You joined the scheme in the last 1 year? Okay, no one. 2 years? 3? Okay, under 5? You were 10 veterans. You've been here for a minute, eh? So this conversation, then it means it's going to be very familiar to you because we've had these sessions every other year, isn't it? Now, there's a question there. And the question is, if your salary stopped today and you only had your savings, how many months would you survive comfortably? Please either use this code or go to slido.com and use that code so that we see where we are all seated in this instance. The responses have started coming in. That's number 1 person, 3 people. Thank you. Keep voting. Seven people have voted. If you're struggling, let us know so that we help you. $15 people. You can see in the room we are quite a number. Tukusaidia. If you're struggling with the scan, we are come here, help here. We can help you with the scanning, or just go to slido.com and then input that code. 17 people have voted. Okay, I'm waiting for at least 5 more people, then we proceed. 20 people. One more minute, 25 people. All right, I'm about to close in a few seconds, so I don't close anyone. Going once, going twice, going thrice. I will close it at that point. Thank you very much for voting. Now, that is 28 people who have voted. You can close the vote. And it is telling us that, and I want to believe 29 of us out of the number that we are here, that is a good representation of this room. True or not? So we can actually tell that 43% of us, if your salary was to stop today and you are to rely on your savings, in under 1 year, you're stuck, isn't it? And that is the reason why you actually have an arrangement called pension scheme. Because you and I, left to our own devices, very hardly would we have the discipline to intentionally save for the days that are coming. And a lot of times, it is why we say that retirement is not an age. It is a financial condition. And the question you need to ask yourself is, when you retire, will your money retire with you, or will your money continue working? And this is a picture of where we are as members of Chuka, that there is work that needs to be done. So that if you were to retire today, because I can rephrase that question and ask you, if you were to retire today, how far would your savings sustain you, all right? So that is just a teaser for the conversation that we are going to have today. And I have the privilege of taking you through your scheme and how the scheme works. And I will start with the scheme structure, and especially for the benefit of members who have joined this scheme recently. It's good to refresh where we're coming from, how far we have come, and where we are going. And speaking of scheme structure, thank you, Albert. I just want to give you an highlight of where we are. The scheme was established in 1967. I know most of you have said veterans, mumekuwa around. I am tempted to ask how many were here when it started, but I won't go that direction. And the scheme is also registered by the Retirement Benefits Authority. The reason why this registration is important with RBA is because it separates the scheme as a separate entity from the employer. The reason why this is important is because then the assets of your employer and the assets of the scheme become two separate things. So if you have debt issues with the employer can never assign your scheme money to employer debts. Okay? And that used to happen a lot, especially before the establishment of RBA in 1997. You would find that the employer has given you a loan, and because you're leaving employment, they recover the loan from your pension contribution. So this registration, it's given under what we call an irrevocable trust, whereby the employer, by the time they're coming to change the terms of that trust, they have to come to you and agree. For example, contributions, so munafanya 10%, and the employer is doing 20%. If they wanted to change that, they would have to come to you to consult on that. And also the aspect of assets. And then it is also registered with KRA. Iya KRA tunajua, sindio? Why do we register with KRA? And you'll allow me to have this section as most interactive as possible. So where I ask a question, I beg, let's have a conversation, because it's also a learning point for yourselves. So why do you think it is important to register the scheme with KRA? Hands up. I give you the mic. Hakuna mtu anataka kujaribu? Ushuru, nimesikia ushuru mahali. Ushuru, tuambie zaidi ya hiyo ushuru. You can explain a bit more? No? Just to pay tax. Okay? So he says to pay tax. But it's actually the exact opposite. It is for you to be exempted from tax. All the contributions that you make to the scheme are tax exempt. And I will explain much more as we continue. But nataka ushike hiyo. That it is because you get exemptions from tax. Number two, it is how it is invested. It is invested in a segregated manner. We call it segregated because the investment profile or strategy is very specific to the members of the scheme. So for example, you have members of Chuka. You can see who has joined recently, how old they are. You can see who is about to leave, how old they are. Now, someone who is about to leave the scheme is expected to make payments. Now, if the scheme is expected to make payments, the person who is investing needs to ensure that there is money available to pay those who are leaving the scheme. So that is why we say it is segregated, because it speaks to the membership of that scheme. So let's say, for example, there has been an employment drive and Gen Zs have been employed. Gen Zs have a long time to retire. So the investment manager has the flexibility to invest the money in asset classes that have a long-term perspective. So it looks at the member demographic, and then that advises the manager how to invest. That is why we call it segregated. And then we have what we call the asset base. How much assets do you have? And for those of you who may have joined us during the AGM in January, we did say that as at 30th of June 2025, we stood at 15.9 billion, okay? So that is where we are in terms of asset. And then your governance body is by a board of trustees. You've met some of your trustees who are here. Others are, as you were told earlier, there is a representation from the various universities who sit in the board, all right? And you've met some of your trustees who are also your colleagues in the spaces where you work. And then the membership, this is the active members who are in the scheme. They are at over 3,000. Now, in terms of governance, we have seen the scheme was established back in the day, and the person who establishes a scheme is called a sponsor. Now, when we say sponsor, we mean employer. Si ule mwingine. Sawa sawa. It's important to be clear. So the sponsor. But now you will ask yourself, where is Chuka in this place? Because you should know imeandikwa Egerton, isn't it? So when Egerton started the scheme, Chuka, Tharaka Nithi, all the others, they adhered. They signed what we call a deed of adherence, so that they adhere to the terms of the scheme. So Chuka also becomes a sponsor. Okay? So every university that is affiliated or is under this scheme is an adhering sponsor. So, but the scheme name has remained as Egerton Retirement Benefit Scheme, and it is formed for your members. Now, then you have your trustees, who are the governing body of the scheme. And because your trustees are your colleagues, they are specialists in different spaces. For example, Bwana Mbaka, what is your specialist? Economist. Bwana TS, wewe uko side gani? Accounting. So umesikia mali wako? Lakini mambo ya pension, unaweza pata, it's very far from what they do on a day-to-day basis. So they call us to come and help them, kwa sababu sisi ndio tuko kwa ground. So they call what we call a professional support case. And these are the people that you had earlier, Bwana Sendeo speaking about in terms of the service providers. So I will highlight each one of them and what they do. So the first one there, you have an auditor. Your auditor is called Ronald's LLP. The auditor comes to you once a year. Anakujaga kwa AGM. If you came for the AGM in Nakuru in January, you met the auditor. Their work is simple. They will come and review the books of account, and they will report to you members that the investments have been done in a proper manner, and they will give you an audit opinion and give you comfort that your scheme is being invested properly. That is the work of the auditor. Then you have the fund managers. For your case, you have two. Mmoja anaitwa Sanlam, mwingine anaitwa Old Mutual. Those are the people who invest your money. Kazi yao ni kuensure the contributions that you're making is having a good return, it is making an interest. But members, a lot of times, munasemaga, who is your investment manager? Tutabadilisha your story. Sindio? So that Zamara has their own work, but also the investment manager kona kazi yake. Now, there is also the property managers. Your property manager, because you have property within the scheme, you have Lloyd Masika and you have Advent Valuers. And then your favorite service provider, let's say it together, Zamara. Sindio? Now, sisi, wacha niwaambie kazi yetu ni gani. Kazi yetu, and Bwana Sendeo said it very clearly, our work is record keeping. We like to call ourselves watu wa mkono. Sindio? Wakati you are joining a scheme, we are the ones who keep your records. When did you join? Your ID numbers, your KRA numbers, all those documentation we keep. And then wakati your HR and your finance are deducting your contributions, that record of contributions, we are the ones who keep that record. Lakini pesa iko wapi? Pesa iko wapi? Iko Standard Chartered, okay? Now you have a custodian there called the Standard Chartered. So wakati you are being deducted 10% every month, your HR and your finance officer will send the money to Standard Chartered, but they will give us a record of every person whose money has been sent to Standard Chartered. Sawa sawa. Now, let's say you have worked for years and years and it is time for you to retire. Now we come in to do what we call benefits administration. Benefits administration is where we compute what is payable to you. Tunaangalia, you joined the scheme at this point. Your contributions over this time is this amount. This is the tax that you are supposed to pay if there is tax that is payable. And then we now give the trustees the final computation to approve. Once the trustees have approved, they will tell the fund manager, XYZ is retiring and they need to be paid 10 million shillings. They will tell the manager, from your investments, look for 10 million shillings. Then now, once the fund manager has found an investment they can either dispose of, they will tell the custodian to do what? To pay you. Kimeleweka? So we work very together from your trustees to the administrator, to your fund manager, and to your custodian. We have to work very closely. And then another thing we do as your administrator, we do communication, like the way we are doing today. This session where we come and we tell you what is the scheme, what is your scheme all about, how do you retire, how do we pay you, what is the tax, the changes in the regulation that has happened, all those things. It's our work to ensure that we are giving you all the information, of course together with the trustees, to ensure that you are well equipped towards your retirement. And then finally, we work very closely with your trustees. Every quarter, we will meet with your trustees. We will look at your investments together with the investment manager. We will look at the records of the members every other time so that the scheme is well running, the scheme is compliant. Sawa sawa. Now, how does your scheme operate? Mumesema mnachanga pesa ngapi? How much are you contributing? 10% of basic, and the employer? 20%. So a total of 30%. Good. Now, when we say that your scheme is contributory, we mean that you are required to be deducted that 10% and the employer does another 20%. Now, while it says you're supposed to contribute 10%, it also gives you the flexibility to do what we call additional voluntary contribution. Hiyo unaona hapo imeandikwa AVC. The reason is, it gives you the power as a member to decide how do you want to retire. Kwa sababu wewe kama sahi mshahara yako ni, for example, 100,000 shillings per month. You remember that poll I started with, where you are not able to go for 5 years. You have the power right now through your contributions to determine how do you want to retire, how do you want to live when you retire. So this kind of arrangement gives you the flexibility to not just do the 10%, to go over and beyond that 10% that you are required to do in the form of additional voluntary contribution. And I will explain to you why this is important. Kwa sababu najua nikisema kuongeza contribution, unafikiria shisha, shoe, housing levy, all those things, okay? But I'll tell you why this is important in a very brief while. Now, so the way this framework works, it is what you put in, it is what you get out. It does not have two ways around it. If you want to retire with 10 million, you have to put 10 million in that pot. If you want to retire with 2 million, it is upon you to do what? To retire with 2 million. Now the good thing for you is that your employer is already doing 2 times what you are doing. Sindio? So it means you have an obligation to do even much more because the retirement is yours. It's not for your employer. Now, every time you get an employment, a lot of times we say the contract is permanent and pensionable. But the question always is, how permanent is this permanence? Sindio? And while being pensionable is a benefit, You have to take your own personal responsibility to make this benefit work for you. Because as you've seen in that poll that I projected earlier, many of us left to our own devices. If I tell you from the 100,000 shillings that you get, you voluntarily contribute 10,000 shillings every month and put aside for your future. Si tumeona tuko wangapi? So that is why it has to be done what? Enforced. Now imagine, and RBA did a research on this, and they found out that of course, outside where there is formal employment like you and I, Kenyans are not doing what? They're not saving. But now you are in a position where your employer is not only giving you a benefit, but your employer is doing twice what you are supposed to be doing. So it's a challenge I'm giving you, members. Take advantage of this platform that you have. Because retirement is a must, and it will come for everybody. But the question is, how are you going to retire? And this is to take advantage of this scheme that we have. So what you have is what you put in, is what you get out, and your trustees have a responsibility to ensure that the contributions that you have put in the scheme is earning interest. Let me ask you a question. Last year, and we had the AGM last month, what was the return that was credited to you? Kuna mtu anajua? How much did we give as the return? How many of us came for the AGM? Let me start from there. Okay. How many of us got our member statements? One. Okay. Mulipata member statements. I can see many of us got member statements. Now, in the member statement, you saw the interest that was put in your member statement. Anyone who knows how much that was? Sorry? Eh? Na wakaambiwa lakini wakasahau. Please. Let's start with you. Let's start with you. Let's start there.
I wasn't. Yes. It was 12, I think.
12.5%. Was that a good return or not? So meaning if you had only 1 million shillings in the scheme, you added 125,000 that year alone. Is that a good return or not? That's a good return, isn't it? Now imagine every other year you will get, give or take, around 9 to 10% on a year-on-year basis. Meaning that your contributions actually are working for you. But are you making sure that those contributions are working? So that is a challenge I'm throwing to you, members. So whatever you put in becomes what you take out. There is no magic around it. And this means the risk of retiring rich, the risk of retiring poor is on whose hands? Siko kwa mikono yako? Sawa sawa. Now, why this AVC is important? Additional voluntary contribution. And this is how it works, even before I say why it is important. Additional voluntary contribution, as the word suggests, it is additional and it is voluntary. Wewe unachanga ile 10%, the one that you are required to contribute. But over and above that 10%, you decide, I want to top up 2,000 shillings. By the way, it goes even to 1,000. I want to top up 1%. It is your own personal conversation. You ask yourself, how much can I add, depending on your financial obligations? And the good thing, because of its voluntary nature, when your financial obligations change, you can always step back on the voluntary contribution. Let's say, for example, umeenda pale nje, umepata, see, we are Kenyans and we are tenderpreneurs and all those things. Or you've even sold an asset, you sold a cow, land, whatever. So if you got money outside your pay slip, money that can take care of your monthly expense, you come back to your HR, you tell them, this month, nataka niongeze AVC. Okay, so that kama ni pesa ulikuwa unalipa nayo rent, for example, through the pay slip, you pay rent with the money that is outside, and then you push AVC through the pay slip. Because remember, all the money that is in the pension scheme must come through the pay slip. So you can't get it from outside. So every time you have what we call a windfall outside the payroll, pesa umepata, tumia hiyo pesa huko nje, but hapa kwa pay slip kuja usukume nini? Usukume AVC. All right? Now, and if that also changes, because a lot of times we can be, what's the word? We can have many financial obligations. Ifike mwezi mahali ukusikie kimeumana, si ndio? You just go back to your HR unamwambia, hii AVC, wacha nichukue break for 3 months or for 4 months or for whatever period of time, and when your finances align again, you come back and continue. Why do you need to do that? Because you are looking at the long-term picture of where you want to be when you retire. And also connected to this conversation, it is because today, if your salary is 100,000 shillings, how much do you think you need to retire with for you to sustain the same lifestyle that you have now? It's a question. Today, let's assume your salary is 100,000 shillings. You retire. How much of that salary do you need to retain or to sustain your current lifestyle? 80%. Sindio? And that is a very good guide. So it means if your salary today is 100,000 shillings, your pension must pay you at least 80,000 shillings. And I want you, because mumeniambia mumepata statement, I want you to look at the fund balance in your statement. If your fund balance on your statement is a certain figure, let's say it is 2 million, I want you to compute 1% of what is in that statement. If it's 2 million, what is 1%? It's 20,000. Sindio? If it is 5 million, it is how much? 50K. Now, I want you to ask yourself whether that 1% in your statement equals to 70% of what you're currently earning. Nimesikia kicheko karibu watu wa And by the way, that is how you do it. If your 1% in your statement is nowhere near 70% of the salary that you have now, then it means if you were to retire today, you will have to make some very significant life changes for you to fit within that 1% that you have. And that is why AVC is important, because it pushes you. Remember, retirement is not for you to just retire with money. You need to transition from work life to post-work life without significantly changing your lifestyle that you live. Now, why is AVC important? Tax relief. Yes. Yeah. Mm-hmm. Yeah. Yeah. To the same. Okay, so you want to bring portal to the front?
Portal so that they can order all the statements now. As they do that calculation of the 1% of what is there, you cannot be digital practical things. I don't know how many of them have their statements already.
How many of us have their statements? 1, 2, 3, 4. Okay, so Trustee, may I propose, when I'm doing the portal, I will recap this. Okay? So if you feel I'm losing you, at some point, I will show you how to access your statement. Na ukiipata, kama uko na umepotea hapa, we will go back to that 1% and that 75% so that si wote tuelewane. Sawa sawa? So don't feel lost, and you may note down whatever question that you may have. Sawa? So that we were able to move. Now, let me talk about the advantages of additional voluntary contribution. Number 1, tax relief. KRA has given us contributors of pension schemes up to 30,000 shillings per month as tax-exempt contributions. What does that mean? If your salary is 100,000 shillings, let's say your basic is 100,000 shillings, your 10% of 100 ni ngapi? 10,000. Your pay will not be based on 100. Your pay will be based on 90. Sawa sawa. So if you do additional voluntary contribution of another 10,000, then you will have pushed your pay now from 90 to 80. So you are reducing your pay. And now they're telling you, agreed. So, and they're telling you, if you do this, I'm giving you up to 30,000 shillings. So imagine if you were to push your additional voluntary contribution to 30 shillings a month. Your pay will not be based on 100,000. It will be based on 70,000. Umepunguza nini? Umepunguza pay. Now remember, your employee also is contributing for you how much? 20%, which is how much? 20,000. So because you as a member, you've added AVC mpaka ukamileza ile allowance ya KRA ya 30,000, employers 20%, they will pay tax on it themselves, alafu ikuje kwa your statement as money that tax has been paid for by someone else. You understand? Now compare this with somebody who is not doing AVC. Someone who is not doing AVC, atafanya 10,000, ile yake anafaa kufanya, pay yake itashuka to 90, sindio? Then the employer, who is supposed to contribute for them 20%, will now utilize the balance of the 20 taxable allowance from KRA, because the employer is not going to pay tax on it anyway, because hujaitumia. So kama hujaitumia, employer anafanya nini? Anaitumia. And then it is recorded as your contribution. So I like to encourage, and I like to say this in whispers, push your contributions to the maximum you can as far as AVC is concerned, so that the other contributions, the 20%, you get them tax-free, because someone else is going to pay tax on that money. Kimeleweka? Sawa sawa. Now, how do we invest AVC? We invest AVC just the same way as we invest the other 10% ile ya kawaida. So if, for example, last year we declared 12.5%, even your AVC got 12.5%. So you're actually gaining both at payslip level and you're gaining on the scheme side, okay, in terms of the investment return. And then when you are leaving employment, umefanya kazi, it is time to retire. And I will explain this shortly, how you access money. But I want to believe that we all know that your money is paid as a pension. Sindio? Si tunajua hivyo. Now, wakati you have an AVC, you can always decide, before you subject my money to pension, or what we call annuity, first give me my AVC as a lump sum. If you have 5 million as your total amount, and in that 5 million, 1 million is AVC, unasema nipatie kwanza my 1 million as a cash lump sum. And then the 4 million ile itabaki, ndio sasa tuta subject to annuity and all those other things that you're supposed to purchase. So it gives you an opportunity to do a lump sum payment. Now, it is a very easy process. It is a form that you fill. That form is available here. I believe TS, we have it. We also have it. Fill that form when you want to do AVC, and we'll be able to effect that through your payroll office. Are we together? Tuko sawa? Great. Now, you have worked, and it is time to pay you. How do we pay you? And there are only 5 points where payments can be done as far as pension money is concerned. Si tunajua wezi kujia hii pesa kama bado uko kazini. Sindio? All right? So the first point of payment, it is at retirement. Because remember, we are saving this money for retirement. What is your retirement age? Let's say it loudly. 60, isn't it? So 60 is a retirement age. And I know maybe that could vary depending on the job categories and all that. But kila mtu ako na retirement age yake depending on the contract that you signed. But constitutionally, the earliest retirement age is? In terms of the Constitution of Kenya, what is the earliest retirement? 50. Okay? All right? Now what you have, the 60, the 75, whatever it is that you have as per your contract, it is contractual agreement between you and your employer. But also, that is what governs the the scheme. However, because there are people who may choose to retire early, you may choose to retire at 50, sindio? You may also choose to retire at 55, or you may choose to retire at 60. Anything from 50 years and above, we call it a retirement. Now, at that point, when you retire, there is how we pay you your benefits. And number one, it is the maximum you can access as a lump sum is a third. So if you have 6 million and you're 50 years and above, the maximum we will pay you is a third of that 5 million. Nimesema 5 ama 50? Iyo, okay? So what is a, or even 6. What is a third of 6 million? 2 million, for ease of mathematics. So 2 million will be paid as a lump sum. Wende ufanya nini? Upige sherehe. Na ujipigie mgongo for working very hard. The balance of 4 million, we pay it as what we call a pension or an annuity. And I'm going to explain this in the slides that are coming. But in simple terms, we pay you pole pole, pole pole, pole pole. Why? Because you are used to getting a salary every month, isn't it? So umezoea kupata mshahara. So that the same way you are used to getting a salary, even at retirement, we ensure that you are getting a salary for the rest of your life. Yes, it's for life. And I'm going to explain this in more detail as we continue. So that is number one. At retirement, I want you to remember, the maximum you can be paid is a third as a lump sum, 2/3 we pay you as a pension or an annuity. And I'll explain that. Then benefits on leaving service. This is what we call early exit. Early exit is anybody who is leaving the scheme or separating from the employer before they are 50 years of age. You are 45, you are 35, you are 49. We call it early exit. Now here, because you may be changing jobs, or you may be, there could be a resignation, could be a redundancy, could be a dismissal, it is any of those things. The law allows that we can only give you a maximum of 50% of your accumulated balance. Up to how much? 50%. If your contributions is 1 million, and for the employer is 2 million, yako tutakupatia maximum ngapi? 1.5. Sawa sawa? It is of total employer and employee. Si tunafanya 10-20. So 10 for the employee is 1 million, 20 for the employer is 2 million. Total inakuja ngapi? 3 million. So 50% of 3 million. Tunakupatia ngapi? 1.5. Iyo ingine you don't touch until you're retiring or until it is retirement. Why? Because the purpose of the scheme is saving for retirement. So if you're coming for the money and you're not retired, and retirement is 50, then you can only get half of that money. And on top of getting half of that money, KRA will tell you, give back the tax that I gave you. They will tax you thoroughly at 30%. Because the money was for retirement. So the government is telling you, if you are below 50, don't access your money. Because first, the tax is very punitive. And number two, you have not attained the age where you're supposed to be accessing this money. But because of considerations where maybe you have been dismissed and you may not have another source of income, it sort of forms like a cushioning for that person. And I do know also RBA is coming up with so many other proposals so that we are not exposing the purpose for retirement and also covering people who may want some short-term financial needs. All right, death benefits. Death can occur, and it can occur at any point when you're working, when you're retirement, or maybe you had left your employer and you had left your money with employer. When death occurs, all the benefits or all the contributions, both from the member and from the employer, they are paid to the nominated beneficiaries. And I will talk about nomination beneficiaries shortly. So that form is the one that guides us how we pay. And then, benefits on permanent immigration. This is where you have left Kenya for good. You have no intentions of coming back. And remember, you have to provide proof that you are gone. Not you are going, you are gone. Sawa? And you don't have intentions of coming back. And we call it international relocation. A lot of us, I know, mtapanda basi muende Uganda mkuje kuniambia international relocation. It will not work. You'll catch a bus tomorrow. Sindio? So international relocation. Then finally, ill health. This is where a doctor has established that you can no longer continue in gainful employment. And of course, by the time a doctor is giving me a letter that you can no longer continue in gainful employment, it starts from your HR office. Haujakuwa ukienda ofisi for some time. Sindio? So that becomes a basis that you can no longer continue. And the good thing is the government has removed all the taxes for guys who are retiring. And that is why it is called ill health retirement. Because even if you are 25 and you are retiring because you are unwell and you cannot continue working, we call it retirement so that we don't subject your money to taxes. Kimeleweka? Great. As we continue, I want you to have a look at this statement, which I believe many of us may have, but also many of us may not understand how to interpret your benefits statement. And I hope, especially the guys at the back, Munaona, can we see? No. Could you move closer so that we can see? Because my screen is on the maximum. And it's good for you to understand how to interpret your statement. Kuna spaces mingi sana huku, if we could move closer so that I try and explain the statement. Now, this is your benefits statement. It's actually at the maximum. Not sure whether it can go any bigger than that, but it's on the maximum. It's a presentation. Yeah, if you have one in the email, please look at it. Sorry? Yeah, if you have yours, I'll look at it so that we explain together. There are seats here as well. Wenye mko nyuma, mko sawa? Okay, mko nayo. Good stuff. Sorry. All right, can we proceed? All right, now, I want you to look at your statement. The first thing I want you to confirm I don't know why the pointer is not working, but the first thing I want you to confirm, members, is this top section here. This top section speaks to your biodata. If your biodata is wrong, a lot of things can go wrong. Number one, we can retire you earlier than you're supposed to. Sindio? For example, if you have the wrong date of birth, see, we are likely to retire you when you're not supposed to retire. If, for example, we don't have your correct names, because a lot of times one person is called Caromina, there's another Caromina, and then you, the differentiating name is the third name. You need to confirm that your details are well captured. So very important is your date of birth, when your date of pensionable service, and your retirement date. This retirement date is computed based on your date of birth, okay? And then, of course, with your policy, and then your names and all that. So that's the first thing you confirm. Number two, it is this section of the statement. Very important for you to understand it. Now, this statement is divided into two sections, and I want you to look here. There is this section, this is a dividing column, but this is the first column, and then there's another column that starts here all the way to here. Now, this first column from here to here records all the contributions that are within 30,000 shillings that is allowed by KRA. So when I was talking about your 10% that you contribute as an employee, we record it under this column called normal. So naona hapo kuna normal. So we will put your 10,000 shillings where? Here. Now, if you do additional voluntary contributions, ile AVC nilikuwa naongea, there is a column for AVC. We'll put it here. Now, let's say, for example, your employer is contributing for you 20%, which is 20,000 shillings, and you are not doing AVC. Let's start where you're not doing AVC. It is just 10 and 20. So 10,000 shillings will come here, and employer's 20,000 shillings will be under the normal column under employer. Now, if you do additional voluntary contributions, say of another 10,000 shillings, we will record the 10,000 shillings, ile ya kawaida, the one that you're supposed to contribute, we will record it here, okay, under normal. Then, the 10,000 shillings additional voluntary contribution, we will put it here. Sawa sawa? From the KRA allowance of 30,000, zimebaki ngapi? Umecontribute 10 ya kwanza, alafu umeweka AVC ya 10. Zimebaki ngapi? Imebaki 10, si ndio? But your employer is supposed to contribute for you how much? 20. So employer only has advantage of the first 10,000. So that first 10,000 will be put here. Under 10,000. The other 10,000, because it has gone beyond what KRA allows as tax exemption, we will put it on this side. That is why it is called non-tax allowable account. So it will come here under employer, and we will put the other 10,000 here. Why? Because we need to differentiate money that has not paid tax and money that tax has been paid for. So the other 10,000 shillings, your employer pays tax on it, and then we put in the record it where? We record it here. Why? So that at the point when you retire, all the money which is recorded on this side of your statement, all of it, whichever time you leave the scheme, you will not pay tax on it because tax was already paid for it. Let me put it another way. Let's say, for example, you are contributing 40,000 shillings. Unafanya ile 10 ya kawaida, 10%, right? We put it where? We put it here. But your AVC is how much? Sini 30. We will record 20,000 here. Si imebaki 10. The other 10, we will record it where? Here. Because anything that is above 30,000, you will pay for it tax at payslip level. To mean, if you're contributing a total of 40,000 shillings, your payee will not be based on 60. Your payee will be based on 70 because KRA has only given you up to 70. So the extra 10, you will pay tax on it at payslip level, but ikikuja kwa scheme, because we don't want to double tax you, tunaweka wapi? Tunaweka hapa. And then the employer's 20%, tunaweka wapi? Hapa. So all the contributions, and especially for those of us whose salaries are quite high, so that your 10% is 50,000 shillings. Sindio? See, 50,000 imeshapita 30,000 a carry. So if your salary, for example, is 500,000 shillings, 10% is how much? 50K. So we will only put 30,000 on this side, and then the balance tutaiweka huku. Because anything above 30,000 shillings, you pay tax on it, but we separate it at scheme level, and then you get it tax-free. Kimeleweka? Great. Now, this figure here is very important. This figure is the total of all your accumulated fund balance from the employer to the employee, from when you started contribution to now. Kama uliingia scheme 20 years ago, your total will be reflected here. So that is a very important figure. And then finally, here, this gives you, every time we give you a statement, that year that we are giving you a statement, you will have the breakdown of the contributions received that month. So for example, you see in this one, if your financial year, for example, for our scheme is 30th of June every year. So you will see the breakdown of contributions that have been received that year. Now for your case also, because NSSF Tier 2 sits within the scheme, your NSSF Tier 2 is also captured. Every year. But Tier 1 iko wapi? Siko huko. So we only record NSSF Tier 2. Your Tier 1 is where? It's at NSSF. Okay? Your NSSF Tier 2 is within the scheme. Okay? Your NSSF Tier 1, because that is what the Act provides, is at NSSF. Kimeleweka? Yes. Yes, trustee. This year, yeah?
2025. So that we don't have a confusion for the other years of NSSF Tier 2, because we started in February of 2025. Yes.
So, allow me to expound what TS has said. The NSSF contributions for Tier 1 and Tier 2 started in 2020, 2023. Sindio? So that is when we started. Now, the Act provided that employers who have schemes like yourselves, they can apply to RBA to bring in Tier 2 to the scheme, because Tier 1 must go where? To NSSF. So your trustees have made that application, and they were given approval by RBA to bring NSSF Tier 2 to the scheme, effective February 2025. Between 2023 February, when NSSF contributions increased, up to January 2025, both your Tier 1 and Tier 2 are at NSSF, because they had not received what? Approval. But the moment the approval was received, Tier 2 came where? To the scheme. Why is it important to bring Tier 2 to the scheme? Number one, your investment returns at the scheme level are superior. If you compare your Tier 1 and Tier 2, which figure is bigger? Sini Tier 2. So we have brought that bigger portion to enjoy the superior investment returns that are in the scheme. Number two, access of benefits. How many of us have stories of years and years of chasing NSSF money to no success? Munataka kuinua mikono ama mnataka kushake miguu? Sindio, si mnajua? So they made it easier for you so that when you want to access your money, si mnajua trustees wenu, na si mnajua Zamara, na uko na portal.
Remind them the rest of it is going to build the barabara ya kwenda Nakuru.
Najua nilisikia huku ni kwa vice president, so sitaki kuongea sana. Iyo sasa. So you have easy access to this money. And I'm going to show you even on the portal. Your portal will even show you your NSSF contributions. And I don't know how many of us have seen their NSSF statements. And I'm sorry, I do not want to talk so much about NSS because I don't want to be saying many things. But sometimes truth has to be said. How many times have you received your NSSF statement and there are gaps in that statement? Sisi nakuaga? Ata mujaona hiyo statement. Sindio? So do you think it is better for your money to be here or otherwise? Sindio? So I think your trustee did a good job to ensure that these contributions are brought closer to you. If you work for NSSF, please pardon me, but truth has to be said. Now, let me move very closely to, yes, Tier 2 contributions. Which particular aspect? Okay, now, yes, who is supposed to make that decision? Now, remember, when you become employed, you come to Chuka and you find that the employer, and when I was doing the governance structure, who established the scheme? It is the employer. Sindio? Wa unakuja unapewa contract, unaambiwa, you have a benefit called pension. So the decision to contract out or not rests with the person who establishes a scheme. Who is your employer? So that is where it starts. Does that make sense? All right. Now, just to say something briefly. Now remember, you have your contributions of Tier 2 going forward in the scheme. You have also the scheme contributions. You also have Tier 1 at NSSF. Uko na ile ya kitambo ya 200 NSSF. And a lot of questions I hear is, so nikiretire nitaanzia wapi? Sindio? That's usually the question. So there are two things. Your account, or rather your contributions currently in the scheme is a provident, it's a pension arrangement. So everything, NSSF plus your scheme, will be paid as a pension. Now, this scheme also, because you will also be given NSSF statement, ile iko na Tier 1. Pia Tier 1 is to be paid as a what? As a pension. Hizo zote tunaweka pamoja, tunakupatia ile annuity, ama pension payment. Lakini ile ya kitambo ya 200, that one you will be given separately as a lump sum. Zinakuwaga tu 200. Sindio? Are we clear? Great. Now, let's move on to death benefits. And this conversation is very important. When you are joining the scheme, there are documents that a lot of us fill very quickly, but there are also other documents many of us are very reluctant to fill. They are called nomination of beneficiaries. And this is a document that tells your trustee, in the event that I am not here today, who receives my benefit? Now, how many of us, by a show of hands, have filled this form in the last 2 years? Kwa ishara ya mkono. 1, 2, wawili, watatu, wanne. The rest of us. There were no changes. No, sure. There were no changes. And it is fair and square. If there are no changes, then it is fine. But if there are changes, that form must be updated as often as possible. Many of us tulingia Chuka whenever tulingia. I think there's a form here. Okay, you got it. Many of us, you joined Chuka whenever you joined Chuka, you are not married, you got married, you have 3 babies, and that form has not been updated. Surely, if anything happens to you, what would the trustees do? Or you even joined as a single lady and you put your mother there, and then you are married, you have 2 children and a husband, but your mother is still the same one in the form. So let's update that form, and it is going around. Update that form as frequently as possible. Because when you don't fill this form, when death occurs and you have not filled this form, I am sorry to tell you that your trustees will make that decision for you. That's why I said I'm sorry. Sawa? But you and I, no one wants anyone else to make decisions around our money. Forms. Trustee, do we have more forms? Okay. There are forms that are needed at the back there. Okay. Now, when I say trustees will make the decision for you, it's not because they want to, it's because the law allows them to do that. All right? So when you go to the law of succession, and when it comes to your real estate, the law says that your pension benefits do not form part of your estate. I'm going to repeat that. Your pension benefits do not form part of your estate. Uko na shamba kule, uko na ng'ombe, uko na nyumba, uko na all those things. Those things can be subjected to an administrator. Even when someone comes to us with a letter of administration and tell us I am the one in charge of my father's estate, pension benefits are not part of, they are not part of that. And the law is very clear. So when someone goes to court, they are usually sent back to the trustees. They tell to go back to your trustees. Now, because the law tells your trustees where someone has not given direction on this matter, you make the decision for that person. And the trustees have a lot of work because they will go and do what we call due diligence. They find out who are your children, the ones that are known and the ones that are not known. Okay? The ones that you have declared and the ones that you are supporting chini ya maji. Because dependency is dependency. If somebody comes to trustees and tell them, by the way, you know he used to pay for my school fees, hata naeza kukupeleka ni kuonyesha statement, I have proof of evidence. Is that a dependent? Ladies, when you fill that form and you leave your husband, what are you telling us? She's single. She's telling us she's single. But then the question becomes, when you are not there, who is the first person who is going to take care of your children? Is it not that same husband that you have given 1%? Senor? So when we are doing this form, I like to tell people, remove emotions out of that form.
Cheryl, and as they do that, ladies and gentlemen, don't be in a hurry to fill that form. Jaza your form pore minus emotions. Look for an envelope.
Yes.
Seal it. You can even staple it. Pressure. Drop them at the colleague's office. Unajua koke? Sasa hata yeye atafungua. Hiyo ni siri yako, si ndio? And then you pray you don't die. Me, I'm not dying. Sasa. So jaza pore to the emotions.
Thank you, trustee. So take your time, fill that form. Ukisikia usiku mumekosana, unataka kumtoa, think about it. Ngoja Monday, uone kama bado unataka kumtoa. Si ndio? All right. When you're filling that form, because I want you to go and take time to think about it, I want you to think about your family. And the question you need to be asking yourself is, who is financially dependent on me? And by the way, I need to clarify. A dependent and a next of kin are not the same thing. They are very different things. Sawa sawa. Make sure you are asking yourself, if I am not here today, who will be most impacted? Next of kin can be anyone. Even me, I can be your next of kin. Hata kama tujuani, tutajuana uko mbele. Si ndio? But dependency, it is something else. It is something else different. And then the levels of dependency. You may have dependency, yes, but what are the levels? You have someone, a child who is in grade 2, but you have also another child who is in campus. Who has a highest level of dependency there? Grade 2. So when you're giving the allocation, you consider the one who has the highest dependency, then you give them a higher allocation. Sawa sawa. And then, how are you splitting the benefits? Your form, it gives you the flexibility to split it all the way up to 100. Lakini watu wengine tuna split, tukikuja kuhesabu inakuwa 105. Hesabu. Just simple mathematics. Sindio? And then ensure also, because the form gives you the flexibility to put as many dependents as possible. Also ask yourself, niko na pesa ngapi hapa? You cannot have 1 million and then you're giving us 12 dependents. I'm not saying it is wrong, but kila mtu apewe finje yake tukisonga. Sindio? How much do you have in that form? And then of course ensure that na tumesema hii kitu ni nini is very confidential. Sometimes you don't want your colleague to witness for you. You also don't want to expose maybe some aspects of gentlemen, outgrowers. Sindio? Mnataka kuweka chini ya mat, find somebody who you can do what? You can trust to witness for you. And then put a date on that form. That date is the one that helps us know, hii ni form ya 2026, hii ingine ilikuwa ya 2019. So we know why it has changed. Sawa sawa? So that date is very, very important. Now, allow me to skip that survey. Tuko sawa? Before I move on, so that I proceed? Great. Now, is there a question?
If you retire early, are those dependent available to access that early money you're going to get? Or it's yours alone until you retire?
He is asking a question. Are those dependents, can they access that money if you retire early? Or? So question. At what point are dependents coming in the picture? When you're not? Sasa ukiretire early, si tunaanza kukulipa ile ya pole pole. Ama unataka? Did I get the question right? So you first have to do what? You first have to go upwards. Sindio? And then we pay your people. Sawa sawa. I hope that helps. Great. Now, I was talking about your salary at 100 and how much you need for you to sustain your retirement, your pre-retirement lifestyle. This is what we call net or income replacement ratio. What is the percentage of your pre-retirement income that you can replace when you're retirement? For example, if you're earning 100,000 shillings and your pension is giving you only 30,000 shillings, is that the correct position you should have? And where should you be? Okay? So we have something called income replacement ratio. And this ratio projects how much of the income before you retire you need to sustain your lifestyle. And actuaries have done the mathematics and they tell us the ideal replacement ratio is 75%. Why 75? Because when you retire, only your work-related expenses are going to do what? They are going to stop. You are driving to work every morning. There was lunch. You are buying at lunch. Whatever it is that cost you money at work, that's most likely the only expense that is going to stop. That is why it is as high as 75. Meaning if your salary now is 100,000 shillings and you retire, you need 75,000 shillings for you to sustain the same level of lifestyle. Now, but kuna kitu ingine inafanyikaga when you retire. You do clearance with your HR office, isn't it? And one thing you return is your medical card. True. Your medical card ukishaipeana, where it exists, I am corrected. Where it exists, it is you and she shashu. Sindio? And especially where you are used to going to these big hospitals. When you retire, there are places SHA will not save you. You have to go to factory settings. Sindio? Factory settings. And so medical bills. And medical bills love old people. Sindio? As you get old, the one thing that checks in is your medical bill. And here you are, you're retired, you don't have the medical cover that your employer was giving you, but now you have to depend on your salary to not only fend for you, but also to take care of your medical bills. That is why all of us are in WhatsApp groups. Tunachanga. Ama ni mimi niko peke yangu. See, we are all there. Changaing 1 or 3, okay? So, and we'll talk about that later. So then how then can you move to that 75%? Remember the poll that we started with. That poll told us, many of us, if you were to retire today, you will only last 0 to 3 months. Katakuwa kameisha. Now, how do you move from that? Number 1, contributions. And I've talked about this over and over again. You are doing 10%. Over and above the 10%, consider additional voluntary contributions. Preservation of benefits. You are moving from one employer to another employer. But the first thing you do once you change employment is to access the 50%. That is where the problems are. It is not because you're not contributing. It is because every chance you get to change employment, the first thing you run is what? Is for your 50% that is in the pension. And I keep asking people, a lot of times we are too much concerned about this 10% that we contribute. And I keep asking, umefanya nini na ile 90 by the way? What have you done with the 90? Because here you have the 10% which has built up to 5 million, but have you done something else with the 90 that you are receiving? Sindio? So that you don't have these issues. And then retirement age. We've said that you can retire as early as 50, but also you can retire as late as 75. Now, if you don't have sufficient income to retire at 50, don't retire at 50. Because una retire kufanya nini? Sindio? So you need to do what? To manage, because these things are in your hands. And then, of course, investment returns. This one lies on your trustees, not directly, but they are the ones who are responsible to ensure that your contributions are earning decent returns, and then the annuity rate that the insurance market gives. It is important, members, to note that the first 3 items there are squarely in your hands. The first 3 ziko kwa mikono ya nani? And that is why I keep saying the risk of retiring rich or poor in this arrangement is on whose hands? Is on your hands. So let's take action where action needs to be taken. Now, you have worked, you have retired. It is time now for us to pay you the amount that you have worked so hard for. And I will ask a question so that I know how this conversation is going. Kwa ishara ya mkono, how many of us here in this room, if your HR tells you, this year you have worked so hard, I want to give you, and your salary is 100,000. We are going to use 100,000 all through. Your salary of 1 year, all of it, 1.2 million, I want to give you this money as a cash lump sum. But continue to come to work every day. Pay your bills when you're supposed to pay your bills. Si ati rent ya next year January unalipa sahi, ulipe hiyo wakati. Sawa sawa. So I'm giving you 1.2 million right now, but your bills, you pay them as they fall due. Continue coming to work. Your life should continue as it should. Let me see how many like that idea. 1.2 million instead of 100,000 per month. 1, 2, 3. Ampendi pesa. 4. All right? Around 4 people would want the money. And I want to hear the reasons why.
I'll personally look at time value of money. What 1.2 will do for me now, maybe in a year's time it will not. So I would put in an investment where I'll get returns to sustain me for that 1 year.
Very well. She will put it in an investment for the next 1 year. There was another hand. It was here.
I'll pay them into 2. 1, I'll pay them into 2. The first category, I'll pay my bills. The other category, I'll invest.
She will divide it into 2. The first category, she will pay the bills. The other one, she will invest. But remember I said, usilipe bills the next year sahi. Ulipe saa ile unafaa kufanya nini? Sidio? Haya, there was another hand. I think it was a gentleman at the back. Help me.
Of course, I'll invest in a way that I'll be getting something per month. And definitely you have other income. So, and the way my sister talked about the value for money, time value for money, that will be more valuable at the moment than waiting for at the end of the year.
Very similar responses. Now, I want to hear from 1 or 2 people who did not lift their hands. Why don't you want money? Kwa nini hamtaki? I want to hear.
It's not that we don't want the money. We just want kidogo, kidogo, kidogo. Number 2, the possibility of misusing that money is very high. Number 3, this is what we're talking about. Investment. Imagine work 1.2. I don't want depression. I want to die when I'm 100.
Please clap for her. And it's the same question I am asking you. This 100,000 shillings you get every month, have you been investing it? Ama unangoja 1.2? No, let's be honest with each other. Are we investing the 100,000 or we are waiting for 1.2 to invest? It's not enough to invest. Anyway, now, a follow-up question. How many of us here in this room, munalipagwa mshahara siku gani? Oh, ni leo. Good. How many of us here in this room today, when your salary is coming, mshahara yako ya January inapatana na hiyo ingine wanapatana hapo kwa bank account? Show your hands. Makofi kwa huyo jamaa. Show us your ways. How many of us? That is 1. Your salary for January meets with the February salary today. And that is the answer I am looking for. Anauliza kwa nini zipatane? Now, and that is the question I want to ask you. We are so used to a lifestyle where when you receive your salary, you have more month left than your money. Not the other way around. More month left than the money. So the question becomes, if you work for 10, 20 years, and you in your entire life, haujawahi shika 10 million shillings, and then I slap you with 10 million shillings, Please tell me what is likely to happen there. Nimesikia I'll die. I hear I will die. What else will happen? Eh? Minister of Enjoyment, wife number 3. You see all those things. And these are not stories. These are realities that are happening. If your village is like my village, one thing that is very common is that we have buildings that have been started construction, zimefika pale, zinakwama. Hizo buildings ni za kina nani? These are retirees. Do you know that? The other thing is people get money and they have very brilliant business ideas. Very brilliant on paper. Sindio? Oh, I will keep chicken, I'll keep pigs, and then those pigs die, all of them, one day. Sindio? Now, this is what I like to tell you. If you have never tried business when you are working, please stay away from business with retirement money. It will not work. And I am not a prophet of doom. I'm just telling you, if you want to learn business, start learning business now when you're at work. Scale it pole pole. So that when you get the third lump sum at retirement, then you can continue scaling it. But don't go start at that time. Because what will happen is you will expend all your retirement money on a business, and what if it doesn't work? You are taking us back to where we are coming from. And where are we coming from? Our parents used to say that our children are our retirement plan. We are not there anymore. That right now, hakuna mtu anafanya kazi akisema, oh, my parent, I will take care of my parents. Sai, Gen Zs are in what we call gig economy. You know what is gig economy? Wanakuja tunafanya gig sai, hey, we are done. Tell me how you are going to depend on that person to take care of you. All right? So that is the premise of this conversation we are having today. Your pension is structured in such a way, because not many of us are having the January salary meet in the same place with the February salary. We want to ensure that every month you are taken care of. Because umezoea kidogo kidogo, wacha tukuweke kwa hiyo line yako. Si ndio? Wapi hapo? Kidogo? Kidogo kidogo. Na hiyo ndio inaitwa annuities. And what is an annuity? An annuity is an arrangement where you take your accumulated fund value to an insurance company and they compute how much is payable to you for the rest of your life. And I want you to note that. For the rest of your life. You have 10 million, for example. Tumesema maximum we can pay you is how much? A third as a lump sum. So tunakulipa 3 million cash lump sum. Minister of Enjoyment, use that one. Sawa. 7 million we convert to an annuity. What the layman will call a pension. Donate to a pension. Inalipwa pole pole. Now, how do they compute it? There are 3 things they will ask you. Number 1, how much do you have? Mtu ako na 5 million, mwingine ako na 10 million. Nani analipwa mingi? Sini 10 million. That is number 1. How much do you have? Number 2, how old are you? This gentleman and this gentleman, they are both retiring. But mmoja ako 55, mwingine ako 60. Who is getting paid more? They both have 7 million. 60. Why? Sema kwa sauti. Life expectancy. Sindio? Amesonga kidogo. 3rd, gender. This gentleman and this lady are both 60. They both have 10 million. Who is going to be paid more? The man. Why? Okay, he's right. We pay the men slightly more. Why? Because ladies live longer. Sindio? So even when you look at your village, you have more older ladies and more older men. Sindio? Retrospection, gentlemen. Sindio? Now those are the 3 main things. Now when you go to an insurance company and they determine, for example, how much they are going to pay you, they will tell you, because we are paying you for life, but also lifetime can mean anything. It can mean 3 months. If I tell you I'm going to pay you for the rest of your life, I don't know what the rest of your life means. It can mean 3 months, it can mean 30 years. It can mean anything, 100 years. So they tell you, pick a guarantee period. A guarantee period is where you agree with the insurance company, you must pay for a minimum of, say, 10 years, whether or not I'm alive. So that should the rest of your life turn out to be 3 months, the insurance company pays back to your family for the balance of 9 years and 7 months. Sawa sawa. But if you pick that 10 years guarantee period, and 30 years down the line, you're still alive and kicking, tumesema it's a lifetime? It's a lifetime payment. So after the 10 years, they will continue to pay you until the day that you drop. Sawa sawa. Now, so this guarantee period is not for you. It is for your beneficiaries. Okay? So you ask yourself, if I am not here today, or if I have, say, young children, how much period do I need these guys covered? Unajua, gentlemen, nimeona mkiununua diapers at 60. Sindio? Sasa unaenda kwa ile guarantee period refu ya 20 years. So that in case hauko, bado tuko grade 2, tunaendelea na maisha. Sindio? Haya. So that is what happens. Now, the annuities, and I want to demonstrate this with a quotation so that we run quickly. So your quotation will look like this. You have a female, you remember when you're quoting all these things, the date of birth, the gender, and the amount, they always must be there because they are determining how much we are paying you. So you have these guarantee periods. The maximum you have in the market is 20. Sawa sawa. So let's say, for example, let me start with 0. When you pick 0 guarantee period, you are telling the insurance company that if I die, no one is payable. There is no guarantee. Sawa sawa. Then you have 5, you have 10, you have 15, and you have 20. Let's say, for example, you have picked 10 years. 10 years, you're telling the insurance company that I am going to pay, they are going to pay you 27,902. Uliwapatia ngapi? 3 million. They are going to pay you every month for the rest of your life. So should death occur on the 5th year, for example, the insurance company will pay this same amount every month to your beneficiaries until the 10th year. And then the payments will do what? Will stop. But if you pick this 10-year guarantee period and you live for 30 years, after the 10th year, they will keep paying you. The only thing they will do, watakupigia kuona kama uko. Sawa sawa, every year. Because if they don't check, they will continue paying. All right? So there is what they call routine annuity check. So every year after the guarantee period has lapsed, the insurance company, they are very creative. Hey, how are you mzee? Tunakuangalia tu hali uko aje. Hivyo, okay? Very simple conversation. So make sure that you don't change your voice. Because if you do, they'll suspect that someone else has picked that call. Now, I don't know why it has moved, but yeah, that's where we were. Now, you are seeing something here called escalation. 0%, 5%, and 3%. Escalation is where a retiree may decide 50,000 shillings right now will not be 50,000 shillings 10 years to come. So they decide they want to cushion themselves against inflation. So yeye anasema, I want my payment to be increasing year on year. So instead of them starting here, because this is a fixed amount, they may start from 18,000. And this 18,000 will be increasing with 5% every year until the payment stops. Now, it is important for you to note, if you are retiring after 60, please wachana na escalation. Because this one may take around 8 to 10 years to catch up with this one. So unless you are very sure that you are going to live for 20 years, then we move to the fixed rate. So this is it. You pick maximum the market has is 20. Now, this is for single life, for you as a retiree alone. When you want to enjoin your spouse, unataka spouse wako akue part of that pension, then you take what you call a joint annuity. Joint annuity is where you tell the insurance, me and my spouse are both insured. Should one pass on, the other one will continue to receive payment. Sawa sawa. So we use your pension money to cover you together with your spouse. If one passes, the payment reverts to the to the other one. So you need to have the same bank account. Kimeleweka? Great. Then you have what we call an income drawdown. Income drawdown is an alternative or an option to the annuity. This one works like your pension statement, but just on the opposite side. In the pension statement, unaweka pesa, unawekewa interest. Income drawdown, unatoa pesa, unawekewa nini? Unawekewa interest. But now it has a caveat. You can only draw money a maximum of 12%. So if you have 5 million, now may retire, you can only draw in a given year a maximum of 12%. What is 12% of 5 million? 600,000. Imebaki ngapi? 5.4. Ile 5.4, it is invested. That year, let's say they've gotten 10%. They credit 10% on that 5.4. When you come the next year, you will take 12% of the opening balance, which is 5.4 plus the 10% that was realized. So you will have to do that every year for 10 years. Okay? That is the minimum period that you can do it. After 10 years, you make a decision. Number one, you continue with another cycle of drawdown for another 10 years. Number two, you cash out, take your money home. Number three, buy an annuity. Those three things. After 10 years, you can either continue for another 10 years, or you buy an annuity, or you cash out. A lot of people will pick income drawdown because of a cash out option. But income drawdown has a difference between income drawdown and annuity. And let me take you through that. Now, this is a quotation for income drawdown so that you understand where it is coming from. This is somebody who had 4 million, if you can see that, and they had the option of drawing out 10% or 12%. All right? So at the end of the 10th year, they had some portion of money which was left, all right, on both cases. And then this is the interest that was done. So this is what you cash out, or you convert to an annuity, or you continue for another 10 years. Now, let's compare the two. It may not be on this screen, but I will take you through. Number one, annuity gives you a guaranteed income. If you have agreed with the insurance company that I'm paying you 50,000 shillings every month for the rest of your life, it is not going to change. Sawa sawa. But income drawdown has an investment aspect. Should the markets go up, your rate will go up. If it goes down, it will go down. So it will impact your amount that you have. So meaning that when the markets are not necessarily good, it may impact the amount that you take home at the end of the 10 years. So you can actually outlive your benefits. Number two, the market risk in an annuity are covered by the insurance. Market risk in an IDD are covered by who? By the member. If the market forces are moving, who receives that is a member. Sindio? All right? So those are the things that you need to do. And then IDD, we like to say that you need to have a significant amount of money to get into it, like 5 million and above, so that the manager has flexibility to invest it. Annuity you can do even as little as 2 million, because there is a form of covering from the insurance company. Now, question, which one do you like better? Hey, it's a chorus. Is it annuity or is it IDD? Annuity on this side, this side. Eh? Sisi watch any annuity?
The risk versus benefit. Simple as that. What is risky benefits you. But if you want to be comfortable, annuity is good. But why do you have always to be pessimistic that the market will be bad?
Yeah.
Market can be good and you rough all the way to the bank.
True. You have a possibility of taking back more money. Okay? It has a risk aspect. That is true. But you ask yourself, am I risk averse? Or do I want to be cushioned and covered? So you pick the one that works for you as an individual. If you are a financial savvy person and you know you can sit with your fund manager and discuss where to put IDD money, by all means. But if you are the same person who is like, I cannot lose 1 shilling, I cannot lose any money, you stick to annuity. Sawa sawa. So pick that which works for you. Now, as I finish, yes.
For you to choose the insurance company to give you the annuity, who was that mandate?
about the tax exemption at contribution, and I don't want to repeat that. 30,000 shillings that you contribute to your pension scheme are what? Tax exempt. Sio tulisema na tukaelewa? Now, when you also contribute to a post-retirement medical fund, I think we'll touch on this in the afternoon, you also get up to 15,000 shillings tax exempt. This was given in the 2024 tax amendment laws that were issued by KRA. So from your payslip, you have a maximum of 45,000 shillings, money that you can contribute, and there is no tax
Just
to it.
if you can allow me just a second to emphasize your answer, that you have it is your discretion to choose the insurance company. Unfortunately, something that you noted the other day, that someone will travel from here to Egerton on your own to go and follow up your money, and the process, because of integrity issues, you find some officers there and they'll try to connect you to some insurance broker, that these people will help you, this will help you. We are curbing that currently. We are underway on actually negotiating with 3 best insurance companies, so that by the time you receive the statement from Zamara about on retirement, it comes with 3 quotations of 3 companies that you can deal with directly yourself without involving anybody else.
Thank you, Trustee. So moving on to tax exemption at retirement, and KRA has really gone all out on this one, telling us that if you are leaving a scheme on retirement basis, retirement ulisema ni miaka ngapi? From 50 years. There is no tax, 0 tax. Sawa sawa? So that is number 1. Number 2, if you are leaving the scheme on ill health ground, I think I talked about this one, no tax. If you have been a member of this scheme for 20 years or more, regardless of your age, there is no tax. Let's say you started working at 20, and now it is you're 45 or 49. There is no tax that you will pay. They're encouraging you to maintain your benefits in the scheme so that you take advantage of the tax. And then we've talked about annuities and income drawdown, no tax on those payments as well. But flip side, you remember when I talked about accessing your benefits before you are 50? I did mention that KRA now is taxing that group of members very punitively. And one thing they did in the tax amendment laws, in the Finance Act, I think, of last year, they deleted Section 8 of the Income Tax Act and removed the 600,000 tax-free amount that group was getting. Meaning, if you had worked for 5 years and your benefits was say 1 million, for every year that you have been there, you would get 60,000 shillings. So 60 times 5 is 300. So from that 1 million, 300 will be tax exempt. They have removed that. Wamesema sasa, hiyo milioni yako, we are going to tax it at 30%, all of it. Telling you don't do what? Don't access your money if you're not 50. So in summary, your tax benefits are at contribution level. The investments on those contributions are tax exempt, and the money that you access at retirement is also tax exempt. What we call exempt, exempt, exempt. And this is one of the best developments we've seen in our industry in the recent years. As I finish, because I don't want to stay here for long, I want us to remove our phones so that we walk through the portal. Ndio wenye mnataka kuupdate NOBs usiku, becomes very easy for you. Let's go to zamaragroup.com. I want you to walk together with me. I want you to take your phones, click zamaragroup.com. Tuko hapo? zamaragroup.com. It's right here, inward. zamaragroup.com. This one. The one that I have highlighted. If you're there, say aye. Okay. Is it okay to proceed? Those ayes are not so many, so that I don't leave anyone behind. Okay, so once you're here, scroll down. Are we there? Click on Kenya. If you're there, say I. Great. Now, next, there is this online services. Hii hapa juu. Online services. Click on it. Once it opens, scroll down until you see pension portal. Scroll until you see pension portal. If you're with me, say I. Okay, the eyes have gone out. Tuko sawa? It is not showing. Uko na bundles? Show her. Okay, if you found it, show your friend. Now, okay, so for those of you who are on phone, you see these 3 dots on your phone. Please click on it. Some outlines may be different. On the right side of your phone, there are 3 dots. Click on those 3 dots, go down, click on sign in. Okay, then you scroll until you see pension portal, then click on explore. Umeona? Here. Okay, then sign in, and then pension portal. There are 3 dots on the right side of your phone. These ones. Okay, then sign in. Okay, then scroll down. Explore. Mepata? Everyone is okay? Wewe hata uko ndani. Yeah. Sign in. Explore. Hapa. This one. No. Slowly. Here. Kosawa? The blue explore. The blue explore. Not green one. Blue one. Tuko sawa? If you have caught it, show your friend. If you've caught it, show your friend. Are we all on the page for signing in? Yes. Tuko hapo? Good. Now, tuko pale. What is on the screen? Are we all together there? So question number 1. If you have interacted with this portal before, it's going to be very easy for you because you are just going to put your work email here and the password that you have been using, and then you log in. If you have never interacted with this portal, you are going to register as a new user. Unaona hapo kumeandikwa register as a new user, okay? Now, when you're registering as a new user, you must use your work email because that is a record we have, okay? So if your name is charlene.kavudha@chuka, if that is your work email, that is what you're going to use. So remember, you are resetting yourself afresh. So you'll have to create a password, and then a code will be sent to your work email so that you're able to come back in and log in with the password that you set up. How many of us are able to log in, let alone registration? Log in. You've interacted with this portal before. I think I saw one person there. Kuna mtu hapo nilipata anafanya hesabu ya pesa yake. Okay, registration. Mumefika wapi? Muko tu hapo. Aya, just try. Now, you'll see like what I'm doing. You put in your email, then the password that you have set. Then it tells you what? Check your email/SMS for OTP. So you have to go to your email and pick that one-time password that has been said. It will come from Zamara. as you can see I am doing. And then you put it, you copy it, you come back, you paste it here, right? Then you submit. Are we okay? All right, let me see where we are. Let me see who has gotten to get member service. If it's giving you an error, tell me it's giving you an error. Your work email is your correct work email. Umefika, okay, setting password, very well. Good progress. Yours? So if you're getting, if you've done the right thing and it is telling you that record not found, you will give me your details so that the office can reset you. Because it means we may be, there must be a conflict with the email that we are holding. Nani ako sawa ama anataka kusaidiwa? Written username, that's where you're putting your email. Yeah. Where there is username, you put your email, your work email. Okay, muko sawa? Anyone who has succeeded? You succeeded? Good. You're inside. Please help your your neighbors. Muko sawa? Okay. Are we okay? Is this your work email? estabari@chuka.ca.ke. Please accept. It tells you please accept. You've not accepted. Accept. Click on that, then submit. It's processing. Okay? Yourself? It's okay? What is yours telling you? Just hold on. imokami@chuka.ac. That's your work email. Okay, so you'll give me your details so that they reset you. When I can see you're doing your password, you're good. Yours should go through. You okay, ma'am? To put the password, you reset the password. Yeah. So usually use this dot in your email. So you just copy it here, like that. Come here. Like you're on the system. Umeenda wapi shule? Wewe umeenda mbali? Yeah, so just come here and sign in. Then here. Then here, put. Remember me, makes your work easier. I don't know. Are we okay? I want to close this session. Tuko sawa? If you're having, if you are sure you have put the right details, but it is telling you record not found, please share with me your names. I'll have that reset from the office. But I've seen quite a number of us have been able to reset their passwords. So try and talk to your neighbor who has successfully done it so that we are able to move forward. Sawa sawa. Now, that said and done, please allow me to conclude this conversation by giving you this comment that retirement will come as a must. Do we agree? Will retirement come or not? So there is a question there. Will you retire comfortably? All right? Will you retire comfortably? Asanteni sana. Mungu awabariki.
Hello. Hello. Bado tuko attentive. Na hiyo maneno yote imeingia. Kushtuliwa. Hiyo mshtuko ni mzuri. Because you are not going tomorrow, at least you can organize yourself. Let's give a better clap for Charlene. We appreciate that presentation. It is the longest. We will not have another as long as that, but that is hiyo ni kama foundation. Hiyo maneno mengine ni kujenga tu hapa, unaweka ukuta hapa, unaweka slab hapa kidogo, but that was the longest. I want to believe that our sugars are quite low, unless we have the energy to continue kidogo. So I'm proposing that we take tea. How many minutes? How many minutes? Somebody is saying 30. We don't have the liberty of 30 minutes. In fact, I wanted to say 10. Can we squeeze ourselves between 10 and 15 minutes? Hakuna nyama kwa hii chai, kwa hivyo hakuna mifupa ya 15 maximum, eh? And from what Mutani is doing and gesticulating, we are making him the timekeeper, so that he can ensure that the 15 minutes are the minutes we are taking. Bwana Gashero, can you bless the tea? Tuende tukakunywa. Na iko hapa tu next. Atuende Tuendelee. Nini? As we settle down, hello? Hello? I see people are quite busy. Sijui watu wako busy, wana access the portal, wanaangalia statement, hawataki kuwa surprised kuona ni 1 million at the end of the 40 years. Now, as you access your statements, if there is an issue that you would wish to clarify, kama unaona hiyo statement yako haisomi vizuri, you expect to be having 5 million, uko na 2.5. Just put your name there, your details actually. Kwa hiyo kitabu imeopeniwa pale. We are going to convey it. Shalina ataenda nayo, and they will sort out issues. I'm saying those who have any claim, any clarification to seek, wanaona reconcile sio sawa, waregister hapo. Tutaorganize vile watajibiwa. The rate of interest ya last year ilikuwa 12.5. Yes. Last year. For this year no bado. Unajua mwaka unaisha June. So after June ndio tuta compute tujue. Now, those who are in, Bwana Olela, I think you can come. Members, we want to look at, hello? Naona bado we are not settled. John Kimamo? Kimamo? TS, wacha kufunga mlango. Kama yeye kwanza anapaswa ku. Now, what I was saying is that we are preparing ourselves for retirement. And during retirement, there are issues that crop up. There are things that will happen to us, all of us as we retire and when we are retired. So we need to learn a few tips on how to cope with now post-retirement. We are pre-retirement now. We are thinking of the future. But that future is approaching. For some of us, it is very near. So we need to know how to adapt to the new life after retirement. I want to welcome our facilitator, Mr. Olela. I don't know how long you'll take. Can you take 3 minutes? Not more than 30. Can it be 20? Can you squeeze to? Try. That's how, Santi. You can use this one so that you can be able to walk around.
Yes. It's afternoon, yeah? Good afternoon. How are we doing? Tuko salama? All right. My name is Olela Kamuru. I'm a clinical psychologist, and my primary work is the treatment, prevention, and promotion of mental health. So today my topic is, I want to look at this transition in retirement. I want to look at it from a psychological point of view. I am glad that today I have experts who can talk about the money side, because that's very important. But for the psychological point of view, the challenge is this one needs a lot of introspection. This is as personal as it gets. Because when it comes to savings and the rest, just from what I've been following since morning, everything is very standardized, right? The percentage, the contribution, and everything. But for psychological preparedness, it's a very individual journey. Everyone knows the community behind them as they engage and prepare for retirement. So I only have 20 minutes, so I'll make it very brief. Hopefully, this can help us introspect, because money issues are very sensitive, right? We say there are 3 universal stressors. The first one is finances, pesa. The second one is work, or lack of it. And then the third one, yes, relationships. As is mentioned, spouse. 3 universal stressors. Pesa, uhusiano, na kazi. Sindio? So today we are talking about finances, how we plan for that retirement. But remember, each and every one of us has a community behind them. So how utapangaje watu wako, so that to make sure that whatever it is you're going to get going into retirement can actually be used and can benefit your life. So I want us to look at retirement. And from a psychological point of view, I won't be mentioning so much about the finances. I want to look at the other angles that go into play when it comes to retirement. So picture this. For the last 20, 30, or 40 years, you've been walking into a workplace, delivering, solving problems, tackling, using all your brain cells and cognitive abilities to execute all your job objectives. Then one day, of course it's not one day because we see it coming, you hit 60 or 65 or 70 and you have to retire. That's a very big change. It's a very, very big transition. And transitions bring losses. And retirement is a form of loss. Losses are different. We have loss of life, of course, bereavement, loss of health, illnesses, retirement, divorce, separations. Sometimes they can be back to back, because sometimes retirement is also pegged with complications of health. But we want to find out what are some of the things that changes when we go into retirement, apart from just the financial planning. Of course, role change. There's an identity. Most of us peg our identity with our work. Remember, I started by saying, my name is Olela, I'm a psychologist. But I will start practicing one day. But hopefully Olela will still exist. Now, who will be this person when their role is gone? So that is the kind of psychological preparation that we're talking about. Who are you beyond your work? Because if we peg our identity with the work so much, when it comes to an end, it becomes a problem. This one also points to our relationships, the people around us. So I'll give you a very short story. I met a gentleman. He retired 4 months in, had not told anyone in his household, not his wife, not his children, no one knew. He was leaving the house every day in the morning, coming back in the evening as usual. So apparently, not everyone knows when we will retire. That's a conversation that hopefully we should have. He kept leaving the house every day in the morning, coming back in the evening for 4 straight months. Until one day, the wife ran into a colleague of his, and the colleague asked her, "Mzee ako aje tangu to retire?" She was shocked. Retire? Lini? Still retire isiku? He had not mentioned anything to the family. So, it might be very easy for most of us to say that I'm going to into retirement. Not so easy for some of us, right? Remember, like I mentioned, when it comes to psychological point of view, it's very, very personal. It depends with the community around you, the nature of the relationship, right? And the quality of the communication. So is it important to even mention to these people, I mean, kazi si ni yako, na wewe ndio unafanya. When you're leaving, should they know? Is it important? And is that an easy conversation? Might be very easy for some. Some don't even know where to start. For some of us, there are fears. The moment I say I'm retiring, the next day I come back, there's no one in the house, depending on the people around you. So you're already undergoing a big transition that involves a lot of changes. And also, it's not made any easier. So we want to move from just asking the financial question, which is, of course, very important, but moving forward to asking, who are you beyond this role? Because our identity will change. What happens then? How will you fill your days? I have 22 leave days in a year. Some have 30, depending on. But after retirement, it's like you have 365 days. What happens then? What happens then? What do we do with our time? Research, of course, tells us that people who are going into retirement without work have a higher prevalence of getting mental health problems. And work in this case doesn't have to be a salaried work. It has to be an activity that gives you a sense of fulfillment, something that gives you a sense of accomplishment. What is your purpose now? Will my relationship survive this change? Because retirement is a transition that involves a lot of things around us. One of the things that is guaranteed is more time with family. How long have you spent with your family at a go? A weekend? A week? Remember COVID? Most of us were with our family for days, longer than we'd wanted to. And that's why if you look during COVID, there was a high case of divorce rate, very high cases of domestic abuse, right? Because I've never realized that being around you for more than a week, I am just discovering how annoying this person can be. I have a lot of pent-up anger that I usually just used to manage by constantly working, right? So those are some of the things that I'm hoping we can get us thinking, because these answers cannot be found in a day. But once we have triggered that part of ourselves, then it can get us thinking. As we plan for our savings and our finances, we also want to ensure that the community around us, right, how it is. And so I'm going to use this definition of mental health to try and just point a picture of what retirement affects. So this is the WHO definition of mental health. And it says that mental health is a state of well-being in which you can be able to do 4 things. One is realize your potential. Each one of us in this room has a potential because there's a role you're serving, there are people you're handling, and you have activities to be able to deliver. This one changes. How now do you reach your potential after retirement? You have to do something. Your ability to cope with stress. That is what we look at into mental. It's not the absence of stress, but what do you do when you cope with stress? Because you've worked for a while and you have this experience to tackle the challenges, especially that go around work. But heading into retirement brings about new stressors, right? Yes. One of them is more time with family and more time in an unstructured environment. Work is very structured. There's policies, there's structures. This is my boss, this is my junior. I tell you no, and you put everything down. But personal life, not so much. You can even tell a kid to stop, and they still continue. So that means that we need to have a shift. Even as you're planning on the finances, we want to ensure that how are you going to cope with the new stressors, right? Retiring, of course, also comes with aging, which brings about new health complications. And sometimes, of course, less of or no medical card that you used to have before. So those are some of the new stressors that we need to look at. And then the last one is making a contribution to the community. This is a very, very important part, the last one. You have to do something that makes you feel fulfilled. Doesn't have to bring monetary value, but if you come in a little pesa, even better, right? And hopefully, it doesn't stress you more. That is why you realize some people who've retired go into activities that probably do not bring them any money, but they insist, right? I might start dairy farming. I am making losses, but at least it helps me to wake up in the morning. Imagine waking up in the morning and don't have a plan. What are the chances that you even leave the bed? Now picture that. Might sound nice. You look like you're going to sleep the whole day. But now picture a whole year. 5 years, 10 years, depending on how much life you'll have after retirement. So you have to engage in activity that gives you a sense of fulfillment, something that makes you feel like I'm actually useful and I can look forward to the next day. So you want to center your life around this. This is why you realize most people after retiring, they go into things like leadership, mentorship, volunteering, trying to find a new purpose, right? Like they say, there's no end to being a teacher. Mwalimu ni mwalimu mpaka siku ya mwisho, si ndio? But kama mwalimu hajaingia class 10 years, Daktari is a doctor until death. But if you haven't spoken to a patient, you haven't assessed anyone for the last 5 or 10 years, right? Then that means that your sense of productivity and fulfillment are affected. And this conversation comes in early as we plan our finances. You also want to have an idea. Like the DVC mentioned in the morning, coming up with a business strategy and you're starting it very early before you go into retirement so that you have a feel of it, right? Very important to have something that gives you a level of fulfillment and contribution. And these are some of the ways we can just use to roughly look at our mental health. It's not that you're always healthy or sick. Sometimes you're in between, right? So you could be excelling, very good, thriving, unsettled, stressor, imeingia, struggling, and then in crisis. Our mental health is always changing. The status of it is always changing and evolving. So we want to be able to notice this because retirement comes with these all challenges that I'll look forward to shortly. Yes. Yes, right. So, especially for community, think about it, especially in our context, one of the things about retirement is what happens. Where do you move to? You go back to the village. Maybe you've been, like for example, my case, I work in Nairobi. You've worked in the city for 30 years, 40 years. I go to Ushago for a weekend, for a week at most. And then after retirement, the expectation is that I go there and spend my entire life with a community that don't even know you and you don't know how to feel fulfilled, right? So are those part of plannings that we can start right now? And that's why I mentioned, for this session, it's more about I read them out. This one's. Okay, so the ones in yellow, this is a gauge of mental health. So it's starting from excelling, thriving, unsettled, struggling, and in crisis. So this is what we call a mental health continuum. Our mental health slowly gets worse, especially if you're not proactive in tackling that stressor. So just an introspection between where would you get yourself at the moment? Of course, I'm not expecting anyone to say it loud, but excelling. Someone is excelling right here. Congratulations. But even if you're unsettled, it's not a permanent state, right? Especially if you're very proactive. One of the things that retirement will need is intentionality. Remember, if I already have a job, I wake up at 5, leave at 6, get to the workplace at 8, work until 5, go home, have a meal, sleep, repeat, and this autopilot cycle can go on for years. But heading into retirement now, you need intentionality because there's no structure. You need to devise a deliberate structure, right? What is going to fill that time? Is it volunteership? Is it work? What is it that is going to take up for that time and that space, right? So these are some of the key things to add on to as you're also planning finances. Identity beyond. The DVC was mentioning about you're going and you keep calling your professor. And you don't feel like you're using those skills. Your competencies are underutilized. It's not a very good feeling. When you notice, you're almost feeling like your cognitive ability are on a decline. It's a very challenge. Especially if you're someone who's very hands-on, very used to tackling challenges, you can imagine when that sort of drop happens and how much it can affect. Relationships. Remember, health is in connections. But sometimes these connections are the ones that are the biggest stressor. Because one of the challenges with retirement is loneliness. But loneliness can even exist in a group. You can be in a house with 10 people, but you are as lonely as it gets. When conversation is now moved to passing information, no one is caring about how you're feeling. Nataka hii, lipa ile. So you only talk when you have to sort bills. That is the reality for sometimes in certain situations. No. Ukiona tu simu, pocket money imeisha. How are you doing? Hello. Sijakula. So we want to ensure that our relationships are very good, right? In my time working in a hospital, especially in rehabilitation centers, sometimes you see retirees bringing in their children, their sons, with history of substance use, and it's torture, not just financially, right? It's very difficult for them to manage. So your relationships, in as much as we are increasing those savings angalia pia. Because this thing can take away, it can pull everything down. And as has been mentioned since morning, most of the things you're doing do not require emotions, right? Or they do not require emotional reasoning. Emotional reasoning is making a decision based on how you're feeling. If you had a very good weekend, I am changing that list on Monday. If I'm rattled, it's going to be changed. So we want to ensure that we are on the top so that we do not involve emotional reasoning in such high decision-making platforms. Are you able to notice when there's a change in yourself? Subtle resentment, very common, some spiteful, and then lastly is a balanced lifestyle. So retirement will bring a lot of feelings. I'll just pass them through. Of course, there's relief. I don't have to walk into the office every day. That old printer that I have to slap 3 times to work, I don't have to see it again, right? If there are certain situations around the workplace that were difficult, you're done with it. That's relief, feeling of excitement. Of course, reduce stress, especially if some of your stressors was coming from the workplace. But it's not always all roses. Sometimes it also comes with difficulty because I said that retirement is a form of loss. Not all losses are bad, but the reason why I'm using the term loss is because it might help you to understand. I have been off work, work was so stressful. Why do I miss that place? Why do I miss those people in that community? So when it's not always good, there are always some challenges sometimes. Grief. Remember I said that retirement is a form of loss, right? Grief is our reaction to loss. Sometimes it could be happiness, could be anger, could be excitement, depending on how you feel about that role. But that feeling is also not permanent. It's almost like it starts off very easy, it's the honeymoon phase. The first few months, you're very motivated, very looking forward to it. Then there's always a loss of relevance. Authority, status, changing. I used to stand here and everyone is on their feet. I used to make decisions affecting thousands of lives. Now I can't even tell my son to get his act together. Very difficult, but the reality of the world. So the goal, especially with the psychological part, is so that our approach is as holistic as possible. As you're building the finances, we also want to build structures that do not take away from the hard work of the finances that we've been putting in place. 30 years of work and saving and sacrifice being brought down immediately, especially when you need it most, based on certain things that probably, with intentionality, we can start putting in the work. Things to do with psychological safety, especially in families, relatives, it's not easy, especially when we shelve it. Just tafute pesa, deal now or die. Who tells you that when the money is there, these people will be ready to be dealt with, right? So we want to ensure that those efforts they are widespread. You're not just focusing on one, and then at the end you realize, probably I had certain habits within myself. Never took time to introspect and find out how impulsive I am. Nimepata lump sum na ndo hiyo imeenda, right? How much is awareness? Anxiety, of course, about the future. Worry, right? Very common. Anxiety is normal. In excess, of course, is a big challenge because retirement comes with growing older. Some of us, retirement actually is what reminds you that I can still work, but somehow I can't keep coming back in here. That is when now the reality slowly, and of course boredom. You're used to mental stimulation, tackling problems, solving them. But now all of a sudden, there's not really much to solve. What do you do? Where do you take all that energy? So retirement is inevitable, but embracing it requires intentionality. And I was mentioning, it's not linear. It changes, right? There's of course the honeymoon phase. Freedom, I don't have to show up. I can use this time to do this personal activity, visit this place, do everything I've ever wanted to do. Then disenchantment, now there's a feeling of uncertainty. Sasa nishafanya kila kitu the first few months or things like that. What else? That's why it's so important to form a new routine. And a new routine requires intentionality. If you have one routine, especially right now, like coming to the work, you're practically on autopilot because you're showing up, going home, repeat again. But to form a new routine, you need to go out of your way to do things that probably, and because as human beings, we tend to trivialize things that do not bring in resources. Bora nipei pesa, hiyo uhusiano inafanya nini? Ikae kando, right? But sometimes they can take away from the hard work we've been doing. Reorientation is now when you're trying to put up a new routine. So now what do I do? Where can I go and just practice for free? Am I volunteering? Am I going back to the farm? Have you ever farmed before? And then, of course, it's now stability, hopefully, which I believe takes work to find a new purpose and a new identity. Because retirement is not the end of life. It's just the end of the job. But maisha bado inakutana, inaendelea. So we have to make sure that that maisha that's going on is as fulfilling as possible. All right? Yeah. So I'll go a bit fast and I'll just ask a few questions that probably I'm hoping that it gets you introspecting on different parts of your life. The thing with especially this kind of preparedness is there's no one size fits all. Some of us have perfect relationships. They're wondering, who anasema nini? Others are wondering, that's an understatement, right? It depends on your environment and the community around you. So it needs a lot of personal touch. Very rarely is there a standard output, especially of gauging this. So when work has been offering you all this, identity, status, you get a chance to show your competence, right? Shooting very high, looking for problems and solving them just so that you prove that you actually can be able to do. But now in retirement, you need to ask now, how now do you gauge your value? If there are no KPIs, there are not tangible deliverables, how now do you gauge your worth and your value? How do you measure success? If probably the work you're doing is not meant to bring in any more cash. Nafanya biashara, this month I made 100,000, I can measure it. But then if you're not doing something that is giving you monetary value, how do you measure your time? Is it the amount of fulfillment? So you have to engage in a lot of personal growth, and personal growth, just from the name, is as personal as it gets. So it's also just a reminder that as we plan finances, of course finances ni muhimu. Remember I said, 3 universal stressors: finances, work, and relationships. So you want to make sure that you're putting work on all of them so that one does not undo the work of the other. So I'll move on straight right to, I mentioned some of the places that can give you purpose. Most of them, of course, will not give you financial reward, but they can give you a sense of fulfillment, something to look forward to. Are you going to be interested in making sure the other people actually are able to give them appropriate mentorship, taking up leadership roles? Could be volunteering. I used to work with refugees, and I had a retiree lady there. She just came 70 years old to volunteer, coming in every day earlier than every person, teaching everyone how to get the work done. I was helped because I was just starting off volunteership, right? Spiritual growth. Remember, it's spirituality. It's not just religion. Spirituality are your values, your beliefs. And of course, if one of your beliefs is that there's a higher power, now you practice spirituality. No, sorry, religion, right? Family, but retirement probably means more time at home, more time with family, which is a good thing. It can also be very dreadful, depending on the relationship with those people. Look at the quality of the relationship you have with your community back home. How often do you stay around them before you just feel like you're getting tired and fed up, right? What is the quality of those relationships? Doing something that makes you feel fulfilled, even as you're looking for an activity that can give you monetary gains. I already spoke about retirement as a form of loss. These are some of the things that you're losing. Of course, your authority. Every role, you have your own authority. People have to answer in this routine. Daily social interaction. I'm so used to my colleagues here. We've been working together for years. When I picture retirement, I am picturing my rural home. That probably I know very few neighbors, right? So that my social interaction will be completely affected. And even if you still have colleagues in the workplace, when you see your phone call, you're wondering, because you're no longer sharing the same space. And these are very difficult things to be able to adjust. So my part, and from the psychological point, is just preparation. Preparation that goes beyond money. Yeah. So for a long time, the gap or the age gap of people who are dying by suicide in the country has always been from around 16 to 35. But recently, there's been a spike, and I witnessed it in person when I went to visit my retired dad in the village. Every time I go there, I find a break in a homestead. An old man died by suicide. I almost felt like it's a chain, and I got worried about my old man. So there is an increasing risk of suicide again in old age, 70. It's always been 16 to 35 and 16 to 40 for a long time, but at the moment, the old age is also being affected. And about suicide, more women attempt suicide, more men die by suicide. The strong gender. Mnanisikia? More men die by? Yes. So do not underestimate, right? It always looks like it's so far-fetched. Haiko hapa. But 75% of deaths by suicides are male. Plus our low life expectancy, ukiongea is hiyo. We are also more prone to substance use and substance abuse. So you really need to look and take care of yourself. Some of us actually, our sobriety is maintained by our work. Kesho ni Monday. Acha niingie mapema. But what if there's nowhere to go every Monday? What now regulates your usage? Yeah? So those are some of the things that you want to be able to put in place, because work sometimes can bring that discipline. If I'm going, especially if you're dedicated to your work, you always want to show up in the best form. But now when there's all free time, what happens then? So I'll move, just allow me to move all the way to here. Remember, it's written here, possible. I am not mentioning that you're going to experience any of this. I pray that you don't. But I believe for you not to, you will have to put in the work. But these are some of the things, mental health concerns, that people in retirement are likely to experience. The first one is depression. Depression is low mood and sadness. Do you know what sadness is? Do you know sadness? How sadness looks like? During the course of my work, I came to realize adults do not know emotions. They don't know how they feel. They summarize everything into stress. When you're angry, stressed. When you're frustrated, stressed. When you're stressed, akijaribu sana, I feel funny. Those are the only two words that adults would use to describe how they're feeling. Very different from children. I tell you, that made me sad when I lose sadness in a garage. He's sad. And you're wondering, what is this sadness that this child is feeling? So, depression is low mood and sadness. Loss of interest in things. And it's made even worse by possible loneliness that comes. It's change in structure. Very common. Of course, anxiety. Anxiety disorders. Not just anxiety. Anxiety in excess. Worry about the future. Every night, and this happens even before retirement. You're going to bed and it's a chain of rumination. Asking yourself, unajiuta mkutano. It's the same question for the last 1 month. Jibu haikuji. We are going through it over and over. Of course, adjustment, right? Adjusting to new environment and dropping the routine you're used to. It's not so easy. I've spoken about substance use. Very common. And especially if you are a user even before, then retirement provides more time that needs to be handled with a lot of care. Substance use. And of course, with now after retirement, you know, human beings are very good at justifying our actions. Right? Defense mechanisms are on point. If you ask a retired person why they're drinking so much, maybe nimaliza kazi. Nimeshafanya yangu. So they will give you responses that almost point to you minding your business and them being left alone. That is how substance use, very, very common. And of course, family conflict. More time with family is not always a good thing. depending on your relationship with them. So, are we going to build another retirement home because the first one, haingiliki? Some of us are forced to start building another one very late because the one you already put up, the people inside, hutaki kuwaona, or they don't want to see you because it happens. I have met people who have actually had to move from the retirement home. You're going into a bed sitter because, let me put my head in a quiet place after working so hard. So ensuring, my biggest reminder is to ensure that we put in the work so that it does not take away from the efforts and the dedication we put in to acquire all our retirement benefits. So I know I was allocated about 20 minutes. I mentioned about cognitive decline. Right? When you no longer have difficult things to solve, no more challenging meetings and deliverables to accomplish, loss of motivation and apathy. Uko tu, you're not happy, you're not sad, you're just numb. You're not really responding to anything in specific. So these are some of the challenges that possibly can happen. But with such a reminder, I'm hoping we can now be able to navigate it even better. So allow me to move. I've mentioned about anxiety. Excessive anxiety is a problem, especially for old age. When you're constantly anxious, even your cardiovascular system will be affected. You're putting your body through a lot. Think about it. Physical symptoms that are brought about because we are stressed, headaches, stomach and gut problems, low back pain. You know that probably that low back pain you're feeling, hata hukuumia, it's just a reflection of the accumulation of stress you have been picking up for most of your working life. Because what happens in our mind is when you've been overwhelmed with so much stress, that stress is now brought outwards to our physical body. Because your mind knows that unaweza kaa na hiyo stress 1 month, 6 months without doing anything about it. But then the moment you hear some back pain, a headache, a stomach problem, you are more likely to get out and get assistance. So we want to ensure that as you're taking care of your health, you want to avoid challenges and health problems that are Oh, okay. All right. I have been assured by the residents that that is a normal sound. All right. So I am mentioning because with aging comes health problems. And these health problems are not made any better when you add psychological stressors that bring it. Right? So 70% of low back problems are actually psychological. So if you're having low back pain, and you're going for physio, massage, and all these things, pia angalia stress levels. It is not uncommon to go to a doctor and anakuuliza kama uko na stress. Na wewe umwambia kichwa inakuuma. Sawa? Because psychological pain will bring about physical symptoms of discomfort. So I will just move, I think, probably to how to manage this, at least the anxiety. Anxiety comes when you live in the future, right? Thinking about the unknowns and the things that have not shown up. One of the things that helps with anxiety is a sense of control and predictability. And if you want that sense of predictability, you have to form a routine that you can actually be able to maneuver. Just the thought of, I don't know what I'm going to do tomorrow and the day after, can be very draining. But when you put up a routine, then what that means is there's a sense of predictability. Like, you have to come to work, probably Monday to Friday, rest on the weekends. That sense of structure brings predictability and manages anxiety. But now when that structure is not there, anxiety is made worse. That worry will only get better when you form a structure that can be able to ease your mind. Of course, finding a new purpose and a meaning, like I mentioned, something else that gives you fulfillment. Ideally, you want to start looking for it right now, before our last days, because we can't retire and then start doing the groundwork. So my biggest reminder is, let us put certain measures in place also. Let us anticipate. As you're anticipating retirement, look at the relationship of people around you, the quality, that home, and the structures around it. Yeah. So allow me to just move on. Actually, my last slide, because the rest will just be a repetition. Oh, on family. Remember I gave that story about the retiree who was going to work every day for 4 months after retiring and not telling anyone. So is it important to tell family? Si kazi ni yako. Wanafaa kujua. Is that an easy conversation? It's not. Yeah. Because we peg our job with our competence and our ability. Some of us, when that job ends, we almost feel like the skills and our competencies has also been affected. But it's very important to have that conversation. It's inevitable. You're being told that we need to talk about death, disease, death, and debt. Disease, death, and debt. These are 3 Ds. But in our case, talking about death is so dreadful. At least we'll have a session here, even when you're mentioned in African context, to write your will. It's like we're telling you to sign your death certificate, right? There's so much dread around it. Even asking about, okay, so ukienda, ungependa tukuweke wapi? Umenipangia nini wewe? Right? It is not, I remember when I was younger, I used to see news on TV of old men who have dedicated their grave sites mpaka wamejenga. I found it very strange. But now that I'm older, I am hoping to do exactly the same at some point. But that is a personal decision. That is not a psychological decision. That is a personal decision because it helps with people who are actually grieving you. Wamejua hii ndo Kenya angependa. Rather than us starting to give you things that you probably didn't want, right? Putting you in a Mercedes house, spending everything on things that probably didn't matter about. So also talk about death, disease, and death. Those 3 things. Illnesses, especially lifelong illnesses. Death and debts, also very important as you plan psychologically. So this conversation is very important to have and ensure, especially, it helps you in managing expectations. When you retire, you want to go back to the rural home. But sisi hataki kurudi ushago. We want to stay in town. So when you retire, kila mtu beba vitu zake, tunaenda. We can have that conversation before so that you manage expectations. Tell us how you'd like to structure things, right? Find a middle ground and reach a compromise. So my reminder is, as we plan for finances, ensure that the psychosocial factors around you are also well addressed. So allow me to end there and invite my colleague to continue. Asanteni sana.
Thank you very much, Banalela, for that session. It is true. Tukitoka hapa, aliwaambia depression ni msongo wa mawazo. That's what Bwana Gashero defines it. Ama kuna different definition? Huh? It is that one. Ama there is no consensus. Unajua kuna Kenyan Sign Language, kuna Ugandan Sign Language, kuna psychologists wanasema the same. Now, I want to invite Albert here, and he will do a small presentation, a short presentation on, in as much as we are doing the retirement things here. And we said, Charlene in the morning said that this is not part of your estate. It is actually outside of your estate. But we also believe that now that you are, and I want to still use Charlene's example. This is only 10%. What we are discussing here is only 10% of your earning, of your basic. There is the other 90% that you must be doing something with. Sinikweli? And if you can seriously think about the 10, then you should seriously think more about the 90%. So we want to bridge that gap, so that in as much as we are thinking pension and talking pension, we are not living in isolation. We know that there are those other things. Bwana Gikunda, I know you have a whole estate somewhere, yako, in your name. So how do you pass it on? Because we are not here forever. How will you pass it on to the next generation? Bwana Albert? Yes.
Have that
questions?
Not as such, the presentation. If
we will provide the slides.
Okay, thank you.
Yes.
Thank you.
Karibu. I see the facilitators using these more because they want to move around. Yes. Come on, movie.
All of us have Slido. I don't know. Am I coming in between lunch? Okay. Members, if you remember the Slido we were doing in the morning, I just want to go back to that one. Can please take out your phones. Just a quick okay. Members, hi, my name is Albert Anam from Zamara, and we are your administrators. I want us to just take 2 minutes. I want to get your feeling about, we've talked about your benefits, we've talked about how you are planning. Now, the trustees are going to at least help the other side, which is the 10 and 20%. What about the other properties? How have you taken care of them? So my question today is this: do you have a valid, updated will? So I'm just saying 4 of us, all of us are saying no. Any other saying 8, okay. One has drafted, but not signed. Okay, there's one who's planning to. Okay, interesting answers. This is 10 of us. Can we get to 15, please? Can we get to 15, then we can just close. So for those who are not coming, so just go to your phones, scan this QR code. If you cannot, just go to Google search and do slido.com, then put this code, 1075871. So we have 10. Can I receive 5 more, please, before we proceed? How many? 11, yeah, 82%. Okay, this has reduced. Nice, it's increasing. Okay. The numbers are where we are. 2 more, can I have 2 more? I want to get to 15. Anybody having challenge? Okay, I'm at 15. So this number is 60% are saying no. So this is 16. 63% are saying no. 24% are saying planning to. 6% have signed a will. Hey, we need to clap for that member. We have 6% drafted but not signed. Tumpigie makofi ndi apate psych to have it signed. Okay, these are interesting figures. So as we are talking about that, so this is where now we come in. We've talked about our property, our savings, what legacy are we leaving behind? So that's where we come in with estate planning. And within the estate planning, we've seen several matters which have been in court. Okay. So we've seen several matters which have been caught. We've seen several succession cases. All of us live in Kenya. And I'll just start by this one. Who has seen this one? Okay. Any other succession case you can mention? Yeah? Michuki's, yes. Any other? Kirima, any other? I know there are so many about them. Yeah? Yes. So, for this court case, Justice Majanja had left a will dated 21st June 2014, na alikufa 2024. How many years are those? Around 10 years. But in that will, he did not include other properties, which is basically pension assets, yeah? So the savings. So the High Court confirmed that will in July 2025, and the executors were appointed. So where the issue came was a 22 million being paid from judiciary pension scheme. Hapo ndio shida ilianzia. So the reason is the will was written that the brother to take everything of his assets. Sindio? But he had a sister, he had parents, but he basically apportioned everything to the brother. But this 22 million was being paid by the judiciary pension scheme. So we say judiciary defined benefits scheme. But now, Justice Majanja did not nominate any beneficiary. Wapi? Kwa pension scheme. So you see the will is there, covering all his assets, but this 22 million from the pension scheme, it is not covered because he did not fill his nomination form. So under that now, the brother who was called Martin Luvisia went to court saying, I was given the sole heir of this property, of the estate. But there's a sister called Annette, and then the parents also went to court saying, yes, you are the sole heir, which is under clause 4C, but under the pension benefits, there is a nomination form to be completed. So under the will, he said all monies in bank accounts, shares and chooses in action are to be inherited by Uyu Martin, yeah? But now that chooses in action is things like debts, legal claims, Sindio. So this Martin said these pension benefits fall under chooses in action. So that's where the claim came from. And then, now the sister went also and argued and said insurance benefits, because this was a group life insurance which falls under the pension scheme, does not fall under the will, but it falls under the Insurance Act and the Retirement Benefits Act. Number two, there's confirmed yes enyewe nomination haijafanywa. So wakasema hapana, hii pesa sisi tulipwe, huyu tumemwachia ngapi? Hiyo ingine. So who can tell me what the issue is with that is? There are two parties here. There's no children by Majanja, but we have a brother who was written as the sole heir of the will. But on this other side, kwa pension scheme, nomination form haijajazwa. Who can guess what the court directed? I'm hoping to have an interactive session. So nikikuangalia, just answer. Yes.
Under the LSA, that should be administered by under the trustees, because that should not form part of the estate that can be adjudicated upon under the law of succession.
True. So the court in its writing, I'll read that clause, that the group life insurance proceeds and employee benefits from judiciary are defined benefits which are defined in advance. So it's the same as your pension benefits. They are administered by the entities without legal action in form of lawsuit or judicial proceedings. So basically they are saying the pension benefits do not fall part of the estate, and you cannot go take the trustees to court to say what? They administer the benefits on your behalf. So pension benefits do not form part of the state, and the court of law does not form any jurisdiction on the pension benefits. So the ruling basically gave the trustees now 14 days of the judicial service. I think the 14 days were ending on 4th of March, that they need to make a decision. They are given a fiduciary responsibility. What is a fiduciary responsibility? What is a fiduciary responsibility? To protect the member, okay? So by that clause, then what we are trying to teach you today is how many of us have nominated their beneficiaries. Because right now, in case of death, then the trustees have the discretion to administer your pension benefits. And I think they also have the group life. Okay, so what is estate planning as we are talking about it? So this is just the process of preparing during one's lifetime for the distribution of one assets upon demise or in the event of incapacity. So what we are saying is you've worked yourself, you've invested, you've done all these things. Wakati hauko, where will your benefits go to? Have you tried to apportion them? So what are the modes of estate planning? So we can have a joint ownership, we can have gifts inter vivos, gifts in contemplation of death. Then we have nominations, we have trusts, and we have wills. So I know most of us from here to here, we are very knowledgeable. But what are the other ways of estate planning? How can you plan your estate? Number one, you can do joint ownership. So in UNye, you register a property in the name of the owner and the beneficiary as joint owners. So we can purchase a land. Myself, Albert, with my wife, we register as one owner. So that is joint ownership. But at that point, in case of death, then the property reverts to the other joint owner, okay? But it's also important to distinguish joint ownership from tenancy in common, where each owner has a distinct share in the property. So you can say, tumenunua eka 10, lakini eka 2 ni zangu, eka 8 ni zako. So that is called tenancy in common. So that does not form joint ownership. Because of, at time of death, the estate ile yenye ulikuwa na own the 8%. These 2% cannot come and claim the 8%, okay? That's the first type of estate planning. So again, you can have gifts inter vivos. This is basically a complete, intentional, and legally recognized gift made during lifetime. Sawa sawa. So hii ni ile nitakuja niseme kama mzazi, nimekupatia hii shamba. Si ndio? But now that kukupatia, it has to make a full transfer. Si ile tinakupatia but title ni yangu. Si tunambianga nikienda ile ni yako. But we don't do the transfer. So that is gift inter vivo. So for gift inter vivos is when you've transferred the property, but the donee, mwenye anapata, you do the transfer immediately, okay? Then we have gifts in contemplation of death. I'm trying to move fast, so ukikuwa na swali, just raise up your hand. So this is a gift of personal. Normally it is movable property made by someone who expects to die in the immediate future. Sawa sawa. Somebody is in hospital, anaona by the hapa, kuna venye. Kuna venye. So anasema, my son, my daughter, ama my wife, come here, I want to gift you some properties. And these properties are movable property. So you cannot come and say, kama ni savings kwa bank. Like for example, you have an investment. That does not form gifts, contemplation of death, okay? So these gifts in contemplation of death must meet 3 requirements. Number 1, the donor contemplates death. So niki contemplate death nikwambia nimekupatia, but I don't die, then that promise imeisha. So you cannot come and say like 1 year, 2 years down the line, it will ni promise. Sawa sawa. It can only be at contemplation of death. It makes the gift conditional on his death occurring. So it cannot move until the death has occurred. Then last but not least, gives control over subject matter of gift to recipient, okay? So it gives control over the subject matter. So the other item is nomination. So nomination is basically what we are saying, nomination of beneficiaries. Si banks pia tunajazanga nomination of beneficiaries. Nimeona sako ilikuwa na tent hapa nje. Nani amenominate? I saw the sako here. Ama tukwangi members wa hiyo sako. Nominate. Si scheme pia tumepewa forms hapa leo tuna nominate. Yes. So those are those estate planning when it comes to nominations. The important thing to note under these nominations, kindly nominate a guardian in case your first choice does not survive you. Sawa sawa. So you can say, I'm nominating A, B, C, but as a guardian, I'm introducing D. That is also in the case of minors. Nomination is very important, mode of estate, but many people do not take it seriously. So in case of divorce, remarriage, not separation, remarriage and divorce, sometimes najua Charlene normally likes saying Friday nini na happen, Monday umechuja, Tuesday umerudisha, Wednesday mumelewana kidogo, tena cycle inaendelea. I know we sometimes we see so many things kwa hiyo activity, nomination of beneficiary keeps going. Yeah. So when we are talking about nomination, I'll specifically stick on death benefits provided in the scheme. So under Clause 36A of the Retirement Benefits Act and Section 23 of the Retirement Benefits Regulations, pension benefits do not form part of the estate. That's why now we were looking at the case study for Justice Majanja. Benefits shall be paid out to nominated beneficiaries, but the trustees who decide may refuse to pay the nominated beneficiary, but that reason for that refusal shall be recorded. An example or an illustration. Ladies, najua saa zingine we don't like putting our men kwa we don't like putting men in our nomination forms. Yeah? I don't know why, but we don't like. I've received several excuses for that. But in case of death, that death happens, and your child is a minor, who automatically becomes the guardian? Is it the father? So if a trustee says they are paying the father, is it wrong? There's a yes here. Is it wrong, ladies? It depends. So yesterday I was giving another illustration. You know, by the ladies, it does not hurt. Your nomination form, muweke hapo muweke 0%. Si nominate. The trustees will see you had the intention to, you thought about them. Sawa sawa. Mpati hata 1%. Kwani si amesaidia mahali maisha yako? I'm just joking on that one. Another example. Yeah? Another example. Another example. Men in the house. Saa zingine, it's not a men issue. I was corrected that yesterday. It's not a men issue, but it occurs mostly in men. Saa zingine, umepata mguu ingine nje. But you've not nominated them in the nominations. And it's your child, na akona birth certificate. But you've not nominated them. Will the trustees take care of that child? There's a no here, yes. You're saying? They were not declared, but at point of death, the child ameletwa, ameambiwa huyu ndio mtoto wa? Yeah? Na akona birth certificate. Sawa sawa. So the trustees remember the discussion. Yeah, kuna wengine wanakuja wanakufanana tu hata ni ngumu kumuruka, yeah? So at that point then the trustees will exercise their discretion and say, by the way, so and so nominated, but mtoto mwingine amekuja. So they can apportion the benefits to that child. But the reason for that change, imekuwa wapi? Recorded. Okay? Then, the last but not least, trustees will consider all dependents. Okay? But this consider does not mean they receive a portion of the benefits. Are we together? What is a dependent? Who is a dependent? Sorry. Somebody who is depending on you, right? So if I have a spouse, is that spouse depending on me? That was a very fast no. But ladies, see, I think it's where I hear ladies saying your money is your money, but his money is our money. Yes, so you basically depending on him. Yeah. So in that case, then the trustees will consider that dependency. Men, hello. We usually do end month M-Pesa statements. We send mtu kando huko 20, 30,000 and it's consistent. Is that dependency? Yes. It is. The only difference will be what is the quantum of that dependency. Sawa sawa. Sisemi wache kutuma, saa zingine peana cash. Ni sawa pia. So, last but not least, you in succession, normally when in succession law, what is considered as number one dependent? Spouse. Spouse or spouses. Okay? What do you need to have a spouse? Marriage certificate, any other document? Affidavit, marriage customary is also a mode of marriage. Sawa sawa. So those three. So if a member has passed on, now by the way, let me tell you, a funny thing we've noticed in the pension, ile siku unaenda, ndio watu wanakuja. That day, ndio watu wanakuja. And others said, I had a man say, when he's gone, that wacha watu wajipange, yuko hapo. So, then number 2 is who? Kids. Sindio? Watoto come number 2. But when it comes to kid, what is the dependency? Mtoto ako 1 year na 10 years. Will they be the same dependency? Yes. Okay, let me hear your reasoning. So if I have 1 million, so you're saying I pay all of them 500, 500. Okay, that's a good analogy. Yes? Yes. Yes, true. Yes, true. Okay? So whenever trustees also consider children, sometimes they can say, okay, all these children are in school. Let's pay equal amounts. And right now they have a trust fund which is running. So they can put money in that trust fund, waseme hii ni ya kulipa nini? School fees na upkeep. So it will just be monitored until watoto watoke. When they leave now, that's when they come and say, okay, tulikuwa na pesa fulani hapa, now pay us the balance. Okay? So that is also a discretion the trustees make. But sometimes when you've already nominated, I want to be very clear. When you've nominated a beneficiary, the trustees must first consider that one. Sawa sawa. So you cannot say they put it aside waseme hapana hebu tuone tutafute watu. No. The obligation first is the nominations. Then now number 2 comes dependency. So after children, who do you think comes number 3 in succession? Parents. Sawa sawa. So sometimes you can have a parent who comes and say, my son was paying for me my medical cover, or my daughter was paying for me a medical cover, and I totally dependent on this person. So then the trustees can make a discretion and access their benefit. Okay. Number 4, siblings. Okay. I hope now we are okay. Sawa sawa. So this dependency, the trustees are just going to look all over the place. Though of course, as zingine due diligence must happen. Okay. But whenever you fill that nomination form, that's a private document. It's very confidential. Hata kama uko na ile ingine uko, mweke tu, because it will assist the trustees to apportion your benefits in the future. Okay? Yes.
Okay, I'm assuming I have 5 kids. I decided to nominate 3 of them, and the other 2 I write them down there and then 0, indicate 0.
Yes.
Is that a subject of reconsideration by the trustees?
That's a very good question. So number 1, you've nominated. Your decision is very clear to the trustees. So that I've written these 1, 2, 3, let's say 25, 25, 25, 25, then the others 0, 0. So the trustees will just consider what is the dependency of these ones umeandika 0, 0. Sometimes inakwanga the adults. So the trustees will say, okay, we will pay as per the beneficiary nomination form. But sometimes precedence has occurred in courts whereby some children have argued, yes, mimi ni mtoto wake, but sikuandikwa kwa hiyo form. So actually they can now come to the trustees and tell them, no, even me, I'm a child. So now they will sue the trustees. Okay? So sometimes whenever the trustees are making these decisions, they would have looked at all this. Number 1, what was your reason for nomination? Number 2, what is the dependency level? Number 3, are they having proper documentations? Then now they make a discretion. But normally what the trustees now have done to ease all this vita, it's just set up a trust fund where the money is kept, taking care of the children, school fees, upkeep, nini nini mpaka wakue waku. Whenever they are 18 years and above, see, they can make a decision. Then now we can release the rest of the funds. Sawa sawa.
Confidential document.
Yes.
So it means that by the time I was filling that nomination form, I was of sound mind and health. It's the same. But I was of sound mind. So I have nominated 2 people. And I'm looking this in the case of men, ndio wanangukiangwa na hii mti. I have nominated 2 people. And I nominated them with a sound mind. And then somebody comes and starts claiming this pension fund of mine. And it is at the decision of now another person to come and say, na by the way, inakaa kama ni ukweli, wacha tae pia tumugawe. Na mimi nikiwa kwa sound mind nilisema mimi nataka hawa wawili. Why is it that you have to include a third party to come and, for lack of a better word, discredit my decision on my nomination paper that as I'm listening to you, you're calling it it's a legal document?
So let me just use this as an example. You've nominated your 2 children, the husband is not there. Or you've nominated husband and 1 child, the other one is not there. Then, at time of demise, Albert comes and says, I was your husband. Sindio, what happens at that point? That's your question? So, okay. So under succession laws, remember, the law is very clear. Sazingine, the law is very clear. It's in the act that trustees can exercise their discretion. But number one, we are not saying that discretion ni kukata whatever you feel. They are bound by that document as the first point of reference. Sawa sawa. So if, let's say you've written my 2 children, husband ayuko hapo, and the children are there and the husband comes and they confirm that, hey, huyu hakuwa na depend on you, they will not take him. Okay? Their reason will be, we did not find sufficient level of dependence. But there comes a time when this dependency is very high. For example, men ndio tunakwanga na hii shida sana sana. I, Albert, have nominated my wife, legally married, sindio, with 1 child. But on the side, or when I'm almost dying, I was living with another lady. I was sending her M-Pesa statements. I mean, M-Pesa. I was paying school fees, or I'm paying their rent. Automatically, it qualifies as a dependent. But now the quantum of dependency, ndio what sasa trustees utasema, no, this quantum does not define dependency. So we are not going to pay that lady. And they will put those instructions very clear in their minutes that they did not pay this because of 1, 2, 3. So we are not saying we are discrediting your nomination form. Number 1 point of reference for the trustees is what? Nomination form. I want to be, tukue hapo pamoja. Then now comes the idea of dependency. Sawa sawa.
This person deserves to be given this money, because you've talked about the quantifiable amount.
Yes.
Aya, then hapo kwa dependent pia niko na swali. Kuna mtu anaweza kuwa ananitumia M-Pesa kila siku au kila mwezi. Maybe ananitumia juu amependa. Si juu mimi niko na shida, yeye tu ndiye ametaka kunitumianga.
Yes.
Or let me use the other word. Now I am the wife and this woman has come and now she's saying mimi natumiangwa. If you do the mathematics, you see, I am not very needy for that money. This person just decided to send. Why is, I'm still at the part that the trustee can decide that this person, because I was receiving X amount of money, now I become a dependent.
Oh, yeah.
Maybe, Albert, for the sake of moving on, there is something members need to remember. The law of succession deals with your assets, your estate, your pension when you're no longer there. Yes. So you're dealing with the property, the savings of a person who is not there to answer those questions. So why did the law give the trustees this? Because if I was alive, you could ask me and tell you, I know I've provided for this person. But now that I'm not there, and the trustees have known there is a wife somewhere, it is assumed that they were telling us today, some of us nominated people in 2010 and we forgot. So it's the assumption that if you are alive and you are reminded that this person is a beneficiary, you could have considered that person. So now that you're not there, we have given them that power by law to think on our behalf and allocate to those dependents depending on. So even the one mwenye anapenda kukutumia, analipia hiyo kupenda kukutumia hiyo 20,000.
Yes, in essence, yeah. Yes. But that is the first reference point. Okay? Okay, let's proceed. Mm-hmm.
See, when you have that form, you give us a less work to do, workload. You see, you have children in school, umeenda, they need to go back to school. Now you never give us a nomination form. Professor Kamuru to start come to your village, start digging information about you unnecessarily. Tupatie at least 99% information. Wacha mtu akuja baadaye. And wakili tell them, tables are turning. For a very long time, we used to have women speak like she's speaking because they are already referred to be a disobedient. There is now clear cases and precedents that have been set in Kenya, where even men are going to court to seek harimony. That you are married to me and I need to continue maintaining in the same state. But I can also go to court and you continue maintaining me in the same state. Now we are equal.
Anyway, guys, this story for nomination can continue. Okay, the last item, then we proceed. Mm-hmm. Yes. That is the point. That is the point. But now, you know money is the root of the love of money is the root of in our community. Yes. Okay. So that's it on nomination. So I'll just look at two other forms of estate planning. Number one is a trust. So basically a trust is an entity created, yeah? So for the purposes of ensuring that a property interest by one person. This is a trust. Cindy, this is a trust. This is a scheme, it's a trust. Of course, it has many trustees, but it's managed by, it's registered entity. So that's the purpose of a trust. So how do trust work? You move the property from you to another entity to hold as a trustee for the beneficiaries. You could be the settler, the trustee, and a beneficiaries. So there are three categories under a trust. So what are family trusts? So family trusts, number one, are set up by Trustees Perpetual Succession Act. It defines it as whether living or testamentary, partially charitable or non-charitable registered by any other person, yeah? So a family trust can be made in contemplation of other beneficiaries. So either you are saying, I'm setting up a trust for my children. I'm setting up a trust for so and so, yeah? Then you move the property to that trust. Then it's made for the purpose of preservation or creation of wealth for generation. And number three, it's a non-trading entity, okay? So you can say, this money, I'm going to leave for my children's children, so that your children cannot be able to sell this trust, okay? So what are the types of family trust? Number one, we have testamentary and living trust. So I'm just going a bit faster. A living trust is created by the settler during their lifetime, okay? And this spells out the settler's wishes. Testamentary trust is created in a will. So whenever you do a will, you can say, my money to be, once I pass on, my money to be moved to a trust. But for a living trust is the one you set up when you are working, when you are still alive, you can create that trust. So, living trust, there are living trusts into irrevocable and irrevocable trusts. So we have the revocable living trust if it contains an express revocation clause in the trust deed. This is exercisable by the settler. Then the irrevocable trust is a trust whose terms are not subject to amendment, change, or revocation by the settler during their lifetime. So for example, the scheme is an irrevocable trust. Sawa sawa. So the terms are not subject to amendment, change, or revocation by the settler. Sawa sawa. So under that irrevocable, we have what is called a trust deed. So the scheme has a trust deed, which is basically a Bible for the scheme. So a trust deed creates a legal relationship between the settler, the trustee, and the beneficiary, okay? So the settler is the founder of the trust. So for example, in this instance, the sponsor is the settler because they are the founder, they are the ones who have set up the trust. Then the trustee is the person appointed to hold the property. So right now we have trustees managing the trust. Then we have beneficiary. This is the third party. So beneficiary can be in two ways, okay? It can be you as a member, or it can be a beneficiary of you, your children, yeah? Then the settler can also be a beneficiary and a trustee. We have some boards where you find this settler is represented in that board, okay? And then some can be members of that. So what are the benefits of a family trust? So number one, it preserves wealth. Number two, it's an untrading entity, so it's exempted from paying tax, okay? Then the operation of living trust is not subject to probate proceedings, also protection against creditor and bankruptcy proceedings. So it can go bankrupt, but it cannot be declared that. So this trust, they have tax benefits. So you as a member, you can set up this for basically tax benefits. So number one, capital gains tax. So the family trust is exempted from paying capital gains tax, okay? And then number two, the income tax. It's the income or principal sum of a registered family trust is exempted from taxation, okay? However, any amount that is paid out of the trust income on behalf of any beneficiary is exclusively for the purpose of education, medical treatment, or early adulthood housing. Then income paid to any beneficiary which is collectively below 10 million in the year of income, and such other amounts as the commissioner may prescribe from time to time, okay? So the only disadvantage of this is loss of ownership. We all know. So once assets are transferred to the registered trust, they belong to the trust and the owner cannot transfer them back. So if, for example, right now you have 10 million, you move it into a trust, you cannot get it back. If you have a property, you move it into a trust, you cannot get it back, but you can benefit from it. Sawa sawa. So members, last but not least, we'll just do wills. So wills are done in two ways. Number one, we have oral wills. So these are spoken wills. You can say, nikikufa, nataka uchukue shamba, si ndio? If I die, I want you to take this car. Sawa sawa. So that is an oral will. But under the oral will, it must have two witnesses, okay? If disagreements on content arise between the witnesses, then the will be invalid, okay? Okay. So nikuje tumesema, nimekwambia nikikufa this happens, but tupigane katikati, then that will is dissolved, okay, even if it had 2 witnesses. So example is, for example, somebody, you tell your child, if I die, you can take this property. Then katikati hapo, our millennials, kuna wengine tunasikia wanashikianga mzee panga, kimwambia unaenda lini. So then that oral will is invalid, okay? And it's not valid longer than 3 months, except for those in active service like armed forces. So this will, it's not valid for longer than 3 months. And then it cannot stand against a written will. So hata ukienda court useme mzee aliniambia nikienda niko na shamba, then akona written will. So what will the court follow? The written will. Yes. No. But you have to have are you of sound mind? Yes. Anything in Kenya, if you are not in sound mind, it's null and void. So right now, that's why we are saying oral wills cannot go to court most of the times. Yeah, because it does not stand the waters. Number 2, one not valid for longer than 3 months. Nikwambia saizi alafu 6 months tupatane, hiyo iliisha. So number 2 is written wills. It has to be signed by the person making the will, sindio? So kuna wale niliona kwa Polo walikuwa wamesema not signed. So that is not a will. You have to sign it for it to be a will. Number 2, it has to be witnessed by 2 persons who do not have to be there at the same time, but to whom the testator has to have confirmed, acknowledged his signature. So tunaweza kuja nikupatie wewe sign hapa, niende mbele nitafute yule mwingine assign, so long as there are 2 witnesses. Witnesses should not be beneficiaries. If I'm telling you I'm giving you this land in my will, you are not supposed to be a witness. You are supposed, haufai kujua nimekuweka. Okay? So let's look at this case law. So testamentary, which is the key legal freedoms. So a testator has absolute freedom. So a testator si ni mwenye ameandika hiyo will. He has absolute freedom. So he can distribute their property however they choose. If I want my son 1%, mwingine 10%, mwingine 100%, that is up to me. And then do not correct unfair wills, okay? So unequal allocation is not proof of wrongdoing. So this is what the court said. If I've left out my wife in my will, it is not unfair. But we've seen a precedence which has been set recently. Ladies or men go to court, what you was talking about. Lady haja kuandika, then I come and say you are unfair to me. Tuliolewa pamoja, we've eaten life together, so you should have put me in the will, okay? Then allegations are not enough, and the testator's wishes are final. So hapa ndio ile sasa yako inakuja. Whatever you had a reason for that, for putting them there. So what are the limitations of will? A will be revoked by marriage of the maker except where it's expressed to be made with a marriage to a specified person in mind. So in case umeandika your spouse and you divorce, then the will can be revoked. Sawa sawa. So if I wrote the will when I was alive that you will take my money, then we divorced in that proceeding, but I did not change this will, then that will is revoked. A valid will could be interfered with for failing to make reasonable provision. So this is where some courts overturn the decisions of your will. Of course, we've said legal, I think you mentioned it, you are not there. So it has the court now to decide on your behalf. Okay, however, failure to make provision for a dependent does not invalidate the will, as the court is empowered to make reasonable provisions, and the court has complete discretion. Sawa sawa. Same way we were saying trustees have discretion, the court has discretion over wills. That's why you see so many cases in court, they go round, and round. So another reason, another illustration was the Ndolo versus Ndolo, where the High Court invalidated the deceased will because the deceased, who was polygamous, failed to provide for his 2 wives, leaving his estate to his last wife. So this by its own invalidated that will. Fairness. Uko na bibi wawili but umepea moja. So the court invalidated that will. Okay? So I'm going to go to advantages of this will. Number 1, it's making your wishes known. Number 2 is just provide for those who you choose. Number 3 is just to protect your children and reduce the possibility of contest. So under here, a will just avoids unnecessary fights over the property. So do's and don'ts of writing a will. The person making a will must be an adult. So mtoto wenye below 18 years cannot do a will. He, she must not be under any disability such as mental illness. So this is a very big clause. So right now wills are being turned because of this. What disability right now has been brought in? See, there's a Disability Act. So that has been brought in, but it did not cover the essence of wills. Then the law categorizes mental or physical illness or drunkardness as a possible cause as to why a testator will not know what he's doing. So same what we were saying, when you sign it when drunk, then it will be considered that you did not know what you are doing. If a beneficiary or a spouse witnesses their will, their gift fails unless there are 2 other independent witnesses. So wills also can do funeral directions. You remember Baba alisema within 3 days. So this can be contained in the will. Yeah. The courts, however, have held that while they should be respected, they are not mandatory. I know there are several cases, kwanza zile za nikikufa unizike ama unicremate. You've heard those stories, and the court has overturned those decisions because they are not mandatory. Yeah. But that is in Africa only. Yes. In most cases, people just comply and it is helpful. Ni kama ya baba way, people just complied. I remember, just to make a joke, I told my mom one day, in case I die, cremate me. Aliniambia hivyo, hauko hapa, sisi ndio tutaamua. So hizo vitu unaniambia mimi sitaki kusikia. Yeah, so my takeaways, things to note. Keep your will away from the beneficiaries. If you've nominated your spouse, make sure asione your will. So the will may be kept by the maker, the executor, or a lawyer, or in a bank. You've seen people having deposit box in banks. So some of them store the will. We've seen others making a friend who's a lawyer, giving them. Then let someone know that you have a will and where to find it. Si eti umesign alafu, so you can even ask your colleague, nikienda ambia nani? Yeah. And then last but not least, the importance of proper planning. Yes. 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 You know, Bebe, it's, I think they are bound by duty of care. As a service provider, as a lawyer, they are bound by duty not to do that. But I think Kenya right now, you know how things are going. Sometimes, yes, you can do that. That's why we find most people nowadays doing in banks. Because once you put it in a deposit box, wewe peke yako ndio unajua penye what account it is, but you must tell that one person. So huyo mtu unaambia also must be very trusted. So members, allow me to stop there. I know I've taken most of your time. I can take any question.
Kibaki passed on. I think his will was already distributed. But sometimes later, another guy, I think from Luoland, came and said that he is Kibaki's son. When the trustee have already distributed the benefits, where will you get other benefits to give this person if the case goes through?
Yes, yes.
Okay.
Sorry?
If you fall ways with your trustee,
Mhm.
whom you have entrusted your will, will you have to change that will so as maybe private and confidential?
Yes, you can. Yes, you can. You see, this will is not set on precedent. You can update it as often as possible because you are the tester. You are the one making that will. So you can change it. Let me come to this question before I take that one, please. So he was asking, please remind me your question.
I was saying that during Kibaki's time when he passed on, his will was already executed. But sometimes later, another person comes from, I don't know from where, saying that he's Kibaki's son. And you've already distributed, or the beneficiary have already distributed. Where is this person going to get his estate or other benefits?
So most of the time you find there are trustee indemnities which cover that. In case of any wrong decision which was made, then the insurance, the indemnity covers that loss. Because you can say the member, let's say the benefits were 6 million, all of it were distributed. So the son has gone to court and consider and checks that yes, this decision the trustees made was wrong. Then the trustee indemnity clauses come in because the indemnity clauses cover the trustee's decision. Yes, that's where you find most of the courts, trustees, legal entities, they have to have an indemnity cover. Yes.
Okay, sorry, my question is a bit off. I've always wondered, this pension, can it pay mortgage for someone? And if so, what percentage? What are the procedures? Can you please be very clear? Thank you.
Okay. I'll say something about it. My colleague Halid, when comes, you can add something on it? Okay. So we had a mortgage regulations that came into effect in 2009, yeah, which just allowed for you to use up to 60% of your benefits, but just as a guarantee, not access, guarantee. So basically, it's me saying I have 2 million, but 60% of it, I can use it as a guarantee only. Haitoki kwa scheme, it's just a guarantee. But now, in 2022, some other regulations came saying you can access up 40% of your benefits, but up to a maximum of 7 million to access your benefits. The courts went and nullified that, the 40 and the 7 million. So what remained is now the guarantee, the commitment. But you see that commitment does not give you money. It's just when the bank uambiwe, we just need a commitment. Then that is when the trustees will consider that. But I don't think your trustee has that.
It has.
It does. Okay, we'll check.
But
which
the old one? Eh?
No, the old one.
The new one is not
there. Yes.
It was nullified. Yes. Actually, the basic answer is you can't use your as we stand here today. You can't use your benefits for mortgage.
Yes.
Period. I don't think Charlene should even add to that.
Yes,
That is it. I want to beg that we stop these questions because there are so many. I know these are an emotive subject, a very emotive one, I know. There is another one who is burning who was burning actually. Naona she is almost consumed by the fire. Wacha tupe Miriam, alafu Jedida kadogo tu.
Yes, sir.
Auna? Okay. Okay, sawa. Lakini nasi next time Jedida tukuje mapema. Walichelewa wengine. Ni sawa, uliza.
Mine is just brief on the issue of the will. What makes this document legal? Is there a certain document that is now recognizable as, or it's just the signature of the testator that is taken as? Okay.
The two witnesses.
The most effective way is have a lawyer do it for you. But also, even if you with your handwriting, you write it, go do, get a witness to sign for you, 2 witnesses, then it's a will. We've seen people having that. Even on a tissue paper. Yes. Exactly. Exactly. It's a will. Yes.
I want us to, I am requesting
Thank
that
you,
we
Chair.
appreciate Albert for that beautiful presentation. And I want to send you as ambassadors. Wale ambao wajakuja waambie what they have missed, so that next time they will come and also enjoy this. Not just enjoying the talk, but also getting that information, because it is good for all of us. How low are our sugars? What percentage are we on the sugar levels? Are we about 60, 70? 30, 50? 50? 50? Okay. Daktari amesema we are still safe. Na akisema, amesema. We want to give Khalid, I was telling him 10 minutes, but I know Khalid can never talk for 10 minutes. That one I've proved. So I will give you 10 minutes, but you can take another 50% extra, which makes you get 15 minutes. Khalid is going to talk about issues, about planning our finances. We have the money, sometimes you don't know how to plan for it. That is why it is not actually the amount of money you earn that makes a difference. It's how you use that money. That's what makes the difference. Karibu Khalid.
Thank you.
15 minutes starts counting now.
Yeah, I'll try to go through what I prepared. So let's find out. Just a pulse check. Do we still have those phones of ours? There is a Slido coming up. There's a Slido coming up. I hope I have internet. There you go. Oh, people are running when I'm talking about finances. Okay. Good. There's a question up there. If you can see. What does it say? What is your biggest financial challenge today? Put it there. Put it there. There are a few options. Let's find out. What is your biggest financial challenge today? Dad? Let's keep going. Keep going to votes. School fees. Let's keep going. Debt. Lifestyle expenses. Yeah. If I get around 10, 15 votes, I'll be okay. Supporting extended family, it is also there. Okay. Debt, school fees. Hope you can see nicely. How many are we? 11. Can we get to around 15, 20? Those who've managed. Debt is still leading. Followed closely by school fees. Debt. Medical, there is none. Medical is 0. Please don't vote if that is not your problem. But I asked this question in Tharaka yesterday because it was almost similar. Medical expenses there, it was not a really big challenge. Why? Why? Sorry? Or we are young and energetic? So we are young and energetic, but we are heavily now I want you to be to turn it around a little bit. Now imagine you are old, okay? Which means this one now will have to kick in, right? Sindio? And then woe unto you if you have a combination of this, a little bit of this, and then this. What kind of retirement are you looking at? Strong. That is why I want us to talk about, and I'll try as much as possible to summarize. Debt, budget, and of course, the most important thing that we don't talk about is how to manage cash flow. Every shilling that comes in, how do we then make sure that we account for it? Okay? Now, one thing that is very clear, we like it or not, the moment we leave employment, our income in retirement will drop. And when we look at the net replacement ratio, we normally say if you can be able to get close to 70% of what you are earning while in work life, you're okay. Because we also expect expenses to do what? To go down. We are hoping by that time, you are not paying school fees in a private school. If at the worst of it all, you are finishing university and you're moving forward with anybody else you are supporting. But one thing that is sure, medical costs are going to increase and we can't run away with it. Cost of living is going to go up. I've never seen a day it comes down. And if you've not planned well, then within 3 to 5 years, even if you had 10 million, it's gone. And we've seen this happening. We've seen this real life examples, what Professor was talking about here. So to help us really go through this, I'll look at 5 pillars quickly. And the first thing is, how do we deal with this animal? That is the first problem, debt. Then number 2, how do we then budget? And especially when we're looking at retirement. Then we control life, emergency, and of course, the financial discipline. Now, debt being my pillar number 1, I call it the silent retirement killer. Because that is where stress comes from. You retire, and your 1/3 cannot even pay 50% of the debt that you have. That is automatically a problem. Because one thing that is for sure is that salary is going to stop, but if you have a debt, interest is going to accumulate, And the most unfortunate part is that the moment you start using your retirement income to pay for loans or any debts that you have, then that is affecting your way of living. So stress will settle in and all that, because you can't really manage. There are things that are beyond your control. But not all debt is bad. There's a good debt and there is a dangerous debt. A good debt is that one where you borrow, put the money somewhere, and that money gives you what? Gives you what? Is able to grow so that you can use whatever income is coming out of it to do what? To repay the debt. That alleviates stress. A good debt is a debt that you can afford. And a good debt must have very clear structures. But a dangerous debt is the one we involve in every single day. Unatoka hapa leo jioni, unapita supermarket, unataka kwa M-Pesa, you don't have enough. What do you do next? Unafuliza. Have we checked the interest rate ya Fuliza? Tumeangalia. It's very high. Unatoka hapo, unaenda pale kwa kona because you need one for the road. Uwezi fika nyumbani ukiwa sawa hivyo. Unaangalia kwa M-Pesa haiko enough. Unafanya nini? Unaingia kwa KCB, Mshwari ama Tala, unatoa hiyo 5,000, unasema usijali, we are almost end month. How many days to end month? Ni kesho, si ndio? So wacha tulijitibu leo, kesho tutafanya lili? Umeangalia utalipa how much? Bora iko ndani. That is a very big problem. And that is, unfortunately, that is where we are. The debt we take now and consume. It is lifestyle driven because lazima tu ufanye hii. Even if it's not wewe lazima umejizoesha, lazima ufanye nini? Upate. It is a very, and those debts have very high interest. Short-term debts, hizi zenye tunakimbilia haraka hivi na unalipa after every month. Trust you me. Have we ever checked Tala, calculated what is the interest rate? I was telling people for Tharaka, Tala in fact watakuambia vizuri sana, don't worry. Sisi tunajipanga na wewe. Ukitaka kuongeza siku fanya nini? Ongeza. Wengine wanakupigia simu wakwambia, we know you are good. Don't worry, you don't have to pay now. But ukiangalia the interest rate is crazy. So please, we need to really be careful. So ask yourself, as you borrow, as you pull out that phone, because unataka kununua mkate na hauna enough unafuliza, is this really an income generation ama it is what? Just for lazima umfike nyumbani na mkate. What will happen if you get home na hauna hiyo mkate? Will it be so bad? You know, speaks to discipline. So please, a dangerous debt is something that you should never carry into retirement. And I've highlighted a few of them here, okay? So if you're going into real estate, you've done your analysis and you know very well that the returns are good, you can borrow. But ask yourself, by the time I'm retiring, how far will I have gone with the repayment? But anything sitting around here in the bad debt, please avoid. Avoid. And if it is in the middle here, ask yourself so many questions. Really difficult questions. Do I really need it? Must I really take it? Will I be able to clear it? How fast can I be able to clear that debt? Okay? So my formula is very simple. And especially for those who are headed to retirement, there is nothing magic here. 5 years to retirement, don't take loans. 5 years to retirement, don't do what? Don't take new loans. Just don't. Let's say 5 years to retirement, and you're going to take a mortgage that you need to pay in 15 years. Even the bank will look at you and ask, are you really okay? Have you gone to the bank and they humbly tell you, no, thank you so much, but you do not qualify? Yeah? But I know you will not go to the bank. Where are you going to go? Sacco. You are going to go to the Sacco. The Sacco, you take how many times your savings? 5 times. 10, eh? 10 times. So you take, you take 10 times your savings. And what means you've taken 10 times your savings and you are retiring in 5 years. What happens? Ask yourself that. So 5 years, please stop. 3 years, whatever loans you have, now find a clear way out to accelerate the payment. Like hakuna discussion, jiite mkutano chini useme, okay, hii nimebakisha miaka ngapi? Where can I get money? Bonuses zikikuja, any dividends zikikuja, tupa huko, reduce by lump sums, but find a way of doing what? 1 year to retirement. Fanya nini? Ile kitu yenye inaitwa loan application. Kama ume opt in, fuliza, opt what? Out. Hakuna maswali. Hiyo kitu toa kwa simu. Tuko pamoja? Any loan application, anything that is short term, get rid of it. So that by the time you're crossing over, you don't have what? Any bad debt. Any bad debt. And if you must carry a debt into retirement, let that debt be able to do what? Pay itself. Tuko pamoja? Kama ulikuwa kujenga, kama ulikuwa investment, kama ulikuwa umefanya nini, umetest everything, umeona hii biashara itafanya nini? Itajilipa. Okay? And najua mtakubali hiyo. But do what? Wacha kugarantii watu. Pesa ya nini? Wacha kuwa guarantor na unaenda retire. You know, the more you guarantee, the more you will want them to do what? To also guarantee for you. Wewe umeretire au wako bado wapi? In work. Waki default, nani atakujiwa? Do you want somebody coming for you wakati umeretire? Najua mmenyamaza. But hiyo ni ni ukweli. As you do that, take time, even now, list all the debts and see which one is the most expensive. Start paying the most expensive first. Start paying the most expensive. Then next month, the money you would have used, pay another one and reduce it and reduce it and reduce it until you get there. Tuko pamoja? Budget. Let me remind you, at retirement you'll get money. There's no question about it. There'll be that 1/3, which is 3 million, 4 million, 5 million, whichever. You'll get it. There is pension. We will put you on annuity, negotiate for you a good annuity. You will get monthly income. Utakuwa labda na biashara zako, sako dividends zinakuja, and any other package that has come in. The question is, what happens next? After that money has come in, what happens next? Okay? So if you are getting into retirement, please, as you budget, what are your essentials? What do you really need that you can't do without? Food, housing, medical, paying electricity, doing that, you can't run away from that. So those becomes what? Those becomes essential. Essentials becomes your priority. Okay? Then come to question number 2. What kind of lifestyle do I need now? Lazima nionekane church, pastor ako hapa, bishop, nikienda kwa church ya bishop, lazima nikuwe recognized huko mbele, mimi ndo natoa tithe mingi. Saa hizi unaweza toa. In retirement, toa yenye unaweza fanya nini? Sijakwambia uache, please do not quote me. Toa tu ile yenye unaweza. Tunasema hivyo, within your limit. Kama ni lazima utravel, enda mahali penye utafanya, watakataa kuja lini? But lifestyle, this is not essential. That is not what? Essential. Try to protect yourself. Have your peace of mind. Live within what? Your means. That is very important. And finally, kuna zile tu ni discretionary. Kama uko tu na pesa enough, unajua umesettle in retirement 3 years, mambo iko sawa, biashara zako zimepick vizuri, now you can afford what? Luxury. Okay? Now, in Tharaka yesterday, I was given a very funny example. I was talking of not, you don't have to go and buy a Range Rover with retirement money. Now umepata the. Then somebody wakes up and tells me, but wakati nitakufa, hiyo Range Rover ndio itafanya nini? itabeba mwili yangu, so mbona nisinunue sahi isibebe? Yeah? No. Buy it only if you can do it, if you can afford. But if it's going to strain your finances, please do not do it. Buy. Tuko pamoja? If you know very well that it's going to strain your finances, please do not go into buying that. But most importantly, please control lifestyle, but protect the essentials. In retirement, here, you can. And you must remain liquid. If you notice, these are the things you buy every single day. So as you go into retirement, make sure that whatever investments you have converted, most of them are in liquid form, money that you can do what? You can access. Otherwise, utakuwa mgonjwa, umepark Range Rover hapo nje, you can't sell, you can't do anything. Sasa bado unarudi kwapi? Kwa WhatsApp. Not because you are poor, but because the kind of investments you have cannot help you at that time of need. So always try as much as possible to be as liquid as possible. Okay? And take a test for those who can. Try to see, especially if you are headed to retirement, take 3 to 6 months. Just live on what income will I get. And if you want to know that, check what other investments you have, then take also your pension and just do 1% of that in terms of monthly income and say, how will I survive with this? After that, track the spending. The reason why it is important to do this is because you will be able to identify where there are gaps and adjust accordingly. Okay? Now let's come to lifestyle. Status. Status. Nimeretire. Prof ameongea juu yake hapa. But bado I want to go to the high-end kinyozi around. I want to drive the best high-end car. I still want to be recognized. Okay? It is a problem. It is a very big problem. Now, there is something that we call here the lump sum psychology. The moment you get a lot of money at once, confidence inafanya nini? Ata walking style inafanya nini? Exactly. You become very intelligent. Yeah. Yeah. Ukiingia mahali, wewe ndio unaongea kuliko dere? Because mfuko ni, that is a very big problem. And let me tell you, for the retirees I've met, hakuna very good investors kama Kenyans who are expecting a lump sum. I am telling you, they plan and plan. You sit down, we sit with these people in rooms, and they give you very creative ideas. Very creative ideas. The problem becomes what? Implementing that idea. The problem becomes what? And I have been in this business for the last 18 years. I have served individual members. Some have made very grave mistakes, and they have ended up regretting. I have seen members who have taken VAS. VAS is voluntary early retirement. Given, tuseme Chuka wants to reduce the nini, but hawataki kufuta watu, wana offer voluntary what? Early retirement. Inakuja na golden handshake, inakuja na pension. Wewe uko tu 49 and 6 months. Umebakisha how many months to reach 50? 6 months. Unasema hapana. That time, I'll give you a case. In 2015, one of my clients was floated VAS. When they floated VAS, it's a pension scheme. That time, tulikuwa tunalipa 100% employee plus 50% of what? Employer. You know how much that is? You are almost wiping out the entire pot. Hawakutaka kujua at tax ni a lot of money. So mtu anaangalia hiyo, anaangalia the send off. Mmoja akakuja kaniambia, my friend, I have a plan. Anambia, what is the plan? Ushaienda kwa ile barabara ya kutoka Machakos kwenda Kitui? Napitanga huko. Kuna mahali kunaitwa Kwavonza. You know the place. Kwavonza, there is a university coming up. It is been established. That university is called what? Seku. Just next to Seku, shamba yetu iko hapo. Mimi sina shida. I already have a catchment area. So I am going to build what? Isn't that a fantastic idea? Is it not a fantastic idea? Hauendi kununua shamba, pesa uko nayo close to 12 million, unaenda kujenga nini? Hostels. Already uko na ready market. Na akani convince properly. Wewe ushaipita pale. Watu wala struggle, wala fanya lili. Nikasema, boss, okay, good. Umefanya, inaitwanga nini? QS. Uliniambia inaitwa nini? BQ. Umefanya, niko sawa. By the way, nilikuwa natumiwa mpaka update photos. The way lori ya cement. Mimi sikujua kumbe unaweza, kama unafanya big construction as an individual, unaweza letewa cement na lori mzima, 16 wheels, natumiwa picha. 6-8 months down the line, napata simu. Can I see you? Yes, I'm in the office, come. What is the issue? How far away? Kuna ile interest. Unajua nikilipo wako kuwa na interest, nikajua hapa there is what? Hapa there is what? Where did 12 million go? By the way, hiyo building imekaa kwa Linton for a very long time. Nyi mkienda huko tembeeni hapo, mtaiona. It is a live building. It is there. Sudden wealth increases what? Risk taking. The moment imekuja, hiyo lump sum, wewe hujaienda China kwenda kuleta material. All of a sudden wewe uko kwa mstari wa mbele unaenda China kufanya nini? Kuleta material. Hujui watu wenye wamekuwa wakienda China wamekuwa wakisurvive aje, wanafanya nini, wanauza, wako na ready market. Please let us avoid such things. Okay? And emotional decisions. Don't ever make an emotional decision with money. Kaa chini, have facts. Remember, hautapata any other lump sum after what? After retirement. Kuna ingine itakuja? Hakuna. So, you have worked building up this money, and then all of a sudden, it just goes to wealth. Take time before you access that money. Some of the mistakes we make are there. Wewe umekuwa ukiishi hapa Chuka vizuri, ulikuwa na opportunity ya kununua shamba hapa, haukununua. Una retire, that is when unaenda unajenga a 7-bedroom house huko village. Wewe mwenyewe village ujulikani venye wamesema. Kuingia haukubaliwi because ulikuwa unakuja na magari umetint unarudi Chuka. All of a sudden sasa unataka wakukaribishe, hawajai kujua hii miaka yote. Please, some of these things we do, let us stop. If you know you're going to retire in the village or you are going to retire around here, let the neighbors do what? Know you. Let the neighbors do what? Interact with you. So that ukienda huko, hautaboeka kwa nyumba. I've had a retiree mwenye watoto wake ilibidi waenda wamtoe nyumbani because of what? Depression. They build a very big house, put up walls, hata kuingia kwa ile compound ni shida. Ni shida. Huwezi ingia, hujuje, gari ikiingia ndio hivyo. Na hii gari ikipita it's tinted, so you don't know who is doing what. Majirani labda mmoja wawili ndio wanajua hapo ni kwa nani? Hapo ni kwa professor. And professor na retire, watoto wako abroad, anapelekwa wapi? Nyumbani. Walienda kumtafuta huko almost when he was passing away. Please, it's good to support families, but remember, also support when you have. This is what I call capital versus income principle. Capital is the engine. If you are starting a business, whether ni kuuza nyanya, whether ni kuweka kiosk hapa, capital is what? The engine. You don't go tampering with what? With engine. Okay? Income is the fuel that runs that engine. Now, always in any business, sometimes we forget. And this is when we retire. Because I have a lump sum, I start a shop. This shop, every now and then, I don't track because niko na pesa kando. Wakati vitu zinaisha, naitisha kwa supplier, natumia hiyo pesa nalipa. Huku, mkate imeisha kwa nyumba, enda kwa duka uchukue. Tuko na duka. Kila kitu imeisha, kimbia hapo ufanye nini? Uchukue. Rafiki amekuja, you are eating into the capital. The moment you eat into the capital, then it becomes a problem. Try as much if you are running the business. Identify capital, separate that capital, note the income, and out of the income, net of all the expenses, then whatever that remains, you can either build up the capital or use if there is need. Tuko pamoja? kama haujafanya biashara yoyote, venye professor amesema, don't wait until you are retiring. That is when unaanza kufanya nini? Biashara. Tuko pamoja? There are so many investment options that can save you your money. You sit at home, read newspaper, go to school boards, do what, but the money is still coming. And all those options are available for you. Emergency fund, I will not even take time telling you why you need an emergency fund. Everybody needs an emergency fund, because emergency fund is what will provide peace of mind. So hata kama umefanya investments, umefanya nini, you need to have money at an arm's length, where when need comes, and need in form of an emergency, you can go and do what? And pull there. So try to build up a reserve of around 3 to 6 months of your income, and that will be able to do what? To help you. Please, you are the only one who knows what your emergency is. So define your emergency and determine what is the right size. I have just done a few proposals here. If you are still working, like now all of us here, we need to make sure that 3 to 6 months we have some income that can sustain us if anything goes wrong and the salary stops. However, if you are 5 years to retirement, you need to grow this to 9 months. At least 6 to 9 months of essential expenses. Please note, essential expenses. For those who have retired, if you can keep an emergency of around 1 year, you are actually very good. But as you do that, separate it from investments, make sure you know what are the investments, and this one you can't build it in a day. You can't say that because I'm having a lump sum, so I will put aside that. No, build it systematically. Monthly, kidogo kidogo, una transfer, and every time you use it, try and do what? Try and fill it up. Now, as I finalize the final one, which is habit. These are very simple things that we need to do. Please, let's track our expenses. If possible, know every month the money you get, where does it go? And is it going to the right thing or not? Review your investments annually. Kuna watu tuko na pesa kila mahali, na hata hatujui zina happen aje. Sit down, that business, check. Is it giving me income this year? What has it given me? What has it done? Do simple accounts and make sure that that does. Avoid emotional lending. Hata kwa rafiki, sometimes just say no. It's okay. Sio ati ni kubaya, because that is what does what? Breaks friendship. That is what. So afadhali nikwambie, okay, sina tusema kweli, ama right now, hata yenye nimekuwa nayo, I'm unable to do what? To do it. Okay? Only when it is really necessary and you know that you will recover that money. But as you approach retirement, please maintain an adequate medical cover. Okay? So do a little bit of reflection. Look at your total debt today. Write it down. For the essentials, what is the monthly cost? Write it down. Emergency fund target. How much will you target? If you say 3 months, 6 months, how much will it be? And of course, you will get here after you have covered this. Then now, come up with one habit, just one habit that you can do it, that you can change. Members, retirement is not about excitement. It's a beautiful thing, by the way. Retirement is a beautiful thing. I have seen people retire very, very, very comfortably. I have seen people who have actually transitioned and saying, I wish I retired earlier. I would have done more in my retirement. But I've also seen the other side where people have retired, and 3 to 6 years down the line, we are being told, uyu, kilikata. Some even as soon as 1 year down the line. So it is all about kujipanga. And speaking of retirement, you know, a good example will be a comfortable retirement like this gentleman, trustee. Yeah. You know, if you retire like this and you're still unangara, unafanya nini, unaeza tembea, isn't that a good retirement? Yes. Unavaa koti in retirement. Okay? So it's very important. Okay? So financial discipline is what is key, because it will ensure that tomorrow you retire comfortably. Well, my final parting shot, and I know Prof touched on this. Please, networks are important. Networks are very, very important. determine where you want to retire, start creating networks in those areas. Discuss with family. Don't be left out. Discuss with family, prepare emotionally. But matters investment, seek professional advice. And they are there. You can actually have money work for you. I have a retiree who has built a very beautiful portfolio in government bonds. And every 3 months, he has money that is coming in that supports him all along. So he doesn't do anything. Yeye hayuko kwa biashara, kazi yake ni kusit on the boards, advisory chair, I don't know which board, and he's doing it so well, and he's very comfortable. That man actually comes from this area. He comes from Chuka. The next time, this time I tried to get him, he was held up because of the meetings. If you can have that kind of retirement, a comfortable retirement, you don't have to wait until 60 years. You are told right now, money is tax-free. Sindio? Sasa kama umeaccumulate 20 million, na unaona, I can take that money early, nothing stops you from doing that. But as you do it, have a plan. If you do not have a plan, start putting a plan now. Tuko pamoja? Sinimalizia hapo. Thank you very much.
Thank you very much, Halit. Nasema asante sana Halit for that wonderful presentation. Kuna mtu aliniambia pesa ina mabawa. Ama ni za wengine ziko na mabawa, wengine zao they are clipped. But that is what happens. You might get money and you get excited, and the next time you realize ile pesa ilienda na hata ujui ilienda wapi. Sometimes you can't even trace where it went. So those are insightful things that we need to put into consideration as we manage our monies. I want to ask a question. From the revelation that the professor had in the morning, are we in agreement that he had a revelation? Ni kama alikuwa ameibiwa mtihani. Mtihani ilisetiwa akaibiwa kidogo. Because essentially what we have been discussing the whole day, as we promised in the morning, is what Professor started with in the morning. And that shows, if again we were in the church, we would say the Spirit is speaking. But now because we are here, it is a revelation that is quite good. We had some visitors from Transnation Circle. Are they still here? They got tired a bit. Walikuwa wamesema wapewe nafasi wasalimie wananchi. Ama walienda na salamu. Kuna mtu aliachia salamu? Walienda na salamu zao? Ukipitia pale kwa tent, waambie tumewatafuta na hawajapatikana. Waambie salamu zilikuwa zinatafutwa lakini hazikupatikana. I want to do two things. I will ask two people to do two things. Number one, I will ask our sister Elizabeth to give us a vote of thanks. And before then, I will ask Mr. Kadhoru. No, after that, sorry, not before. After that, I will ask Mr. Kadhoru to close for us with a word of prayer and also bless the lunch that we are going to fellowship together with. If there are any questions, we can still channel our questions to Khalid. How do we channel our questions? Pale tu kwa your email. Okay. The email will be projected here. You can have a question on what we have covered today. That is okay. It is welcome. You'll get an answer. You can also have a question on your fund account. We said we register all those who have issues. Sijui kama kitabu bado kiko hapo. It is there. If you have any issues with your account, for example, your data is not tallying with what you think. Your names are wrongly put, or you didn't get a statement. All those things, those are issues that you can raise, and they are going to be addressed by Charlene. That is even after this. You can still follow up on such things. Otherwise, from our end, from the trustees' end, I want to believe, TS, you can be as witness that we are happy. We know today we had a lot of things happening. In fact, we had to negotiate with management even to postpone some. Today there was supposed to be an induction for the deans, directors, CODs, HODs, all those people. Tukaona watu bado ndio watakuja hapa. Kumekuwa na defense nyingi sana leo. Kumekuwa pia na mikutano mingine kama mitatu hivi. And the same people were attending. So you may be surprised, TS, to find that the people who started here in the morning are not the people who are here. Which means that at least somebody amekuja akapata ka share kidogo akaenda nayo. Mwingine akaja akapata share yake akaenda. So we are well covered. So I want to request our sister Elizabeth to do that humble job. Then Bwana Kathuru, then I want to wish you a wonderful evening. And our friends, as they travel back, we wish you journey mercies. Asanteni.
Good afternoon, members. Nimeambiwa I give a vote of thanks, but I want to believe ya mwisho ya kumanage pesa imetutachi sisi wote. Kuna mtu yuko kwa polisa, sijui ni nani. Si tutatoka kwa polisa? Tumeambiwa tutoke zile kidogo kidogo. Thank you. I think when I was trained on retirement, when I was working at hospital, I was told 7 years before retirement sifai kukuwa ninalipa loan. Leo nimeambiwa 5, sijui kama nitamaintain 5 ama 7. But we want to thank God that we have been given an opportunity to be here, to be trained. We want to thank our people from Chuka, Professor Kamwelu, Mr. Sendeo, for finding it good enough to organize for this training. I think this should be my second or third. I don't like missing because I know there are good things. So we will promise that we will come again. And for all the trustees who have also come, then Zamara, our administrators, we are grateful and we thank you for finding time. And we want to promise we'll put that into action so that we retire. Even if we choose to retire at 50 or 55, then we will be good enough to retire. Thank you.
Let us believe and pray. Father, in Jesus' name, we are grateful for who you are in our lives. We want to thank you for the very good session that has been happening today from morning up to this moment. It is an arrangement that was made long time ago, and it has come into fruition. We want to thank you for that. We want to pray that as we depart from here, the lessons that we have learned, as we go to implement them and also as we go to meditate about them, you are going to be our guider and also be our protector. Thank you for the very insightful learning that we have had. We want to pray that our trustees and also the Zamara, as they depart and they go back to their various places of residence and also of work, you will give them journey mercies. Thank you because of even the food that is prepared for us to partake. In advance, we want to thank you. May you continue to even give us spiritual food on top of the material food or the physical food that we are going to partake. We want to pray that you may continue to bless the universities that are involved in the scheme, and also continue giving insight to our people who are overseeing all what we have learned. Thank you because you love us and you continue to love us. For this we pray, trusting and believing in Jesus' name. Amen. And the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Amen. Maybe we can be told whether we are eating from here.
A small announcement, tafadhali, Gilbura. We will have our lunch served still in the hotel. If we cannot fit, there is a seating upstairs. And now that we are finished, we can also disseminate the information that lunch is being served so that the members who came and left, they can also enjoy the lunch with us. Thank you very much. Mwenye aliuliza mambo ya transfer of funds from Jubilee, from Pwani University to here, you can come and engage. Others, we can enjoy our lunch. Thank you very much. We thank Beatrice very much for that.